Good morning, everyone. Thanks for joining on a Sunday morning. You can do many things, but you took time to join this meeting. That shows that you are interested to learn new things and create a better life for your family and your community, your friends. So, in next 30 minutes, I want to explain why earnings play, right? What is earnings play? What is the benefit compared to other trading strategies? All these things. But before that, first right. You might be thinking why I need to hear from Kishore, right? I'm Kishore from Houston, Texas. I'm in market since last 5 plus years. We have a free community called US Equities with around 15, 16,000 members, and then we have premium channels for options, stocks, crypto, futures in US, India, and we build some indicators, algos, which are working very good, giving us 85, 90% success, stocks, options, and also for earnings. So I'll explain everything and I'll tell you why you need to focus for next 30 to 45 minutes. Just again, right? I'm not trying to tell you that every week or every 2 weeks we can make 20% return, but recently we started a family and friends fund where we started with nearly 1.5 million. We are just playing earnings in that earnings play. Around in last 2 weeks, we made around 20% return on that. So nearly right. So we took a lot of earning trades like Microsoft, Tesla, UPS, Team, ABBV, CVLT. Nearly we are making 85 to 90% success with our earning trades. So these are like the trades in the week one, right? Nearly 85%. In the week two, nearly 90%, except one trade. In week three, including Apple, LYB, Team, Tesla, UPS, Microsoft, Meta, Nokia, CAT, Comcast, nearly 85 to 90% we are making success with the earning trades. So most of you might be new to trading and thinking like, okay, what is this earnings trading or what are right? How to do the earnings trading? So I'll explain from the basics so anybody who is completely new to trading also can understand. And then I'll take some previous examples and also I'll take some examples for earnings which are coming in the coming week. So you understand, right? You can connect all the dots and you can see how potential it is, right? How much money we can make with very low investment and also with very less amount of time. You don't need to sit throughout the day. You can just spend some 15, 20 minutes before the market close and then you can do this trading. So what do you mean by this earnings, right? That is the first thing we all need to understand. At the end of each quarter, right? That means at the end of December, from January to March, we have thousands of companies, right, which are listed, uh, right, public listed companies. So those companies need to report to their investors, right? If you are buying Tesla stock, that means you are a small investor in the Tesla. You are a small shareholder in the Tesla company. If you are buying Apple stocks, you are a small shareholder in the Apple company. Or if you have Meta, Google, or whichever company, whatever stocks you are buying, you are a small, you received a small ownership. So for every 3 months, these companies need to show what they did in those 3 months. What is right? How much the shareholders, how much earnings they got per each share, or what is the revenue that company generated, what is the guidance for next 3 months, what they are going to do. So everything they have to share every 3 months once. So it is a very strict guideline as per SEC. So we get this information well in advance that okay, which company is reporting on what date, whether that is reporting before the market open or are they reporting after the market close, right? So stock market generally your market hours are like 8:30 a.m. Central to 3 p.m. Central. So every day in these 3 months, right, from January to March, and every day there will be a few companies which will be reporting before market open. There will be few companies which will be reporting after the market close. Right? That means before 8:30 a.m., some companies may report at 5 a.m. Central. Some companies may report at 6 a.m. Central. Some may report at 7 a.m. Central, like that. And then in the same way, some companies will report at 3 p.m., 3:15 p.m., 3:30 p.m. Central, right? After market close. Because why they do it after market or before market? Because they don't want huge volatility. Whenever these companies report earnings, right? For example, let us say Microsoft reported bad earnings or negative earnings. They made less revenue than expected, or their guidance is not great for the coming months. It can suddenly dump the entire market. So that's why generally these earnings are either before the market or after the market, because during the market there will be so many, right, millions of traders who will be trading. So they don't want to impact a sudden jump up or jump down. So that's why generally they do it after market. So after market, the volume will be generally very, very low. You cannot do options and you can only do stocks. Even stocks also, there will be very less number of players. That's why earnings are reported either before the market open or after the market the close. And whenever these companies report the earnings, right? If the earnings per share is good, if the guidance is good for the next 3 months, or if the revenue is good, suddenly they can move so huge, right? It is not only sometimes revenue is good, but let us say we expected AMC to report a bad earning, right? For example, the all the big analysts are expecting AMC to report some minus 20 cents of loss on the share, but it reported only minus 10 cents loss on the share. That also can move the price so much up, right? It is not that always they should report positive earnings. Sometimes even they report negative, but the negative is less than what was expected. That also can take the stock price so much high. And sometimes, even though the company may report good earnings, but if it is less than expected, right? For example, you expected Meta to report very good earnings, but Meta reported still they are positive, their guidance is good, their earnings per share is good, but it is not as much as expected, right? There will be always lot of high expectations for the big companies. If it doesn't meet the expectations, even though the earnings are good, that also can bring the price down. So it is very important for you all to understand that earnings are not just based on earnings per share or the revenue they made in the previous quarters. It is also one more very important factor is the guidance for the next 3 months, right? Guidance for the future. If the company says that, okay, we have all these plans, we are trying to build this, trying to do this, we are trying to increase the revenue by so and so percentage. If that future guidance is good, sometimes even though your last 3 months earnings per share or revenue is little low, but guidance is good, that can take the stock so much high, right? For example, Apple reported very strong guidance for the next 3 months, so that took Apple to, right, nearly 3-4% up on the next day. So it is very important for you to understand what is earnings per share, what is the revenue, and also what is the guidance for the coming quarter. I hope everyone is clear until now. So why, how we can make, right? Why this earnings play, right? You can buy stocks. If you think you are bullish, you can buy stocks and make money. Or if you are bullish about a company, you can buy some option calls, you can make money. Right? Next day, just all you need is your whole period is only one day. You are not waiting for weeks or months together. Just before one day, if you think like the stock can go up, you can buy stocks or you can do options. Again, within options, you have different strategies, which I'll explain later. But there are so many different ways you can make money by this using the earning strategy. So this is just for example, right? These are the different companies which are reporting in the coming week, right? If you see Monday, you can see that before open, there are some, these are some major, right? There might be another 40, 50 companies, but these are some of the top companies which are reporting. Again, after close, on Monday after close, you can see Palantir is reporting. Then you see RBB, Bancorp, NXPI is reporting, Rambus is reporting, Fabrinet is reporting. On Tuesday, before market open, that means before 8:30 a.m., it can be 5, it can be 6, it can be 6:30. All these companies are reporting. After close, AMD, right? This is very major. Google and another top company. And so, and then on Wednesday, we have Uber, Disney, NVO, Toyota, like that. There are so every day you will have minimum 5 to 10 opportunities, right? Even though there are 40, 50 companies, this is one website which shows, right? You can go to Twitter or you can go to their website, you will get a calendar every week. By Friday, you will know, like, okay, what are the major companies reporting? So now you can understand that, okay, Palantir, you have an opportunity to make money with Palantir, or NXPI is one of the chip-based company. We can make money with that. So that is your step number one, right? To make money with the earnings, the first thing is you need to understand which companies are reporting. For example, if PayPal is reporting on Tuesday morning, Tuesday before open, then what I need to do is before 1 hour, right, before the market close on Monday, I need to go and look at PayPal chart, or I need to go and look at Spotify chart. I need to go and look at Pfizer chart. And if there are a lot of big companies, right? If some big Bank of America, JP Morgan, such type of companies are buying millions of stocks for PayPal 1 day before, 2 days before, then there might be a very high chance that PayPal might report good earnings or good guidance. We can make money. Or if we see a lot of big companies are selling Spotify, then there is a high possibility Spotify might go down. So that because the big companies make 90% of the money in the market, right? 90% of the time they make money, they also lose money. It is not that 100% of the time they make money. If they are investing millions or trillions of dollars, right? Whatever money we save in the bank, they go and do this. They buy stocks, they do option plays, they sell the call, sell the puts, they do all those things. And they may have some huge tools, right? Some great tools because they have trillions of dollars they are investing into the market. Or they may also have, sometimes they may have some insider information, right? Which what can be the earnings, all those things. So if those companies are doing something 1 day before or 1 hour before, there is very, very high possibility for a big move in that stock. If they are shorting, also we can see that. So I'll show you some examples, right? How we made 85-90% success, right? Again, nobody will teach you all these tips because these tradings itself will cost you thousands of dollars, right? For example, for Microsoft, right? I'll also show you. So if you see, right, so that you get full confidence that I'm right, not sharing something which we did not do. So if you see Microsoft, so what we did for Microsoft, we did something like, okay, sell Microsoft 467.5 call, buy 472.5 call. So if we are doing, this is something called as a bear call spread. What do you mean by bear call spread? That means you are bearish about a stock. We are selling a lower strike call and buying a higher strike call. That is called as a bear call spread. So when you generally, most of us know about naked calls, naked puts. That means you buy a call if you are bullish, you buy a put if you are bearish. But to make money 85-90% of the time with in stock market or with earnings play, you need to understand about a concept called as credit spreads. That means because 90% of the time in the market, the sellers will make more money, more than the buyers. If you are buying a call or buying a put, if you buy a call, only if stocks move so much up, then only you will make money, right? Because generally before earnings, the premiums will be very, very high. If you buy a put, only if stock goes so much down, only you will make money. Because you are paying so much, you are expecting something will go down, you are paying so much. And if stocks drop so much, then only you will have profits. If stock drops only $2-3, you may not make money. Or if stock goes up only $2-3, you may not make money. But with the concept of as a seller, even if it stays at the same price, you will make money. If it drops, you will make money. If it goes little bit up, you will make money. Like that, Microsoft, we were bearish, right? Why we were bearish, I'll explain. So, for example, if I go to Microsoft, right, you maybe it's 28 when Microsoft reported. Okay. So for Microsoft earnings, you can see there are a lot of sell orders here, right? Before the earnings, we can see there are a lot of sellers and buyers are only here. If we can see some buyers close to the current price, that means big companies are buying. But all big companies are trying to buy the Microsoft at a bottom. There are no buyers somewhere close. We can see only if you see red boxes, that means there are more sellers. So you can either buy the puts or you can do something called as a bear call spread. That means as long as Microsoft, if you see the alert, if Microsoft goes below 467, you can keep all this money collected, right? You are collecting. You are like an insurance company. You are collecting premiums. And if Microsoft stays below this price by 131, all that money is yours. Or even if it stays little in between these two, all this money is yours. So for UPS, right? UPS, we sold 140 call and buy 144 call. So again, let us go to UPS example. So you can see that, right? Before earnings, you can see 5 million sellers, 3 million sellers. So as long as if UPS stays below 140 call, all that money what collected is 100% yours. So whenever you are doing a bear call, that means you are bearish. You are selling a lower strike, buying a higher strike, and you are collecting money. That means like you are just like an insurance company where you are telling them that okay, if UPS goes to 145 also, I will sell you at 140. If UPS goes to 150 also, I'll sell you because you have a tool which you know that all these big companies are selling. So you can be confident that okay, it will stay below 140. So I'm going somewhere here and doing a bear call spread because 95% it will stay below this. So if you see next day, it dropped nearly to $120. So all the money, 100%, whatever you collected is yours, right? If you see huge sell order blocks, that gives you a confidence, right? Once you collect some money with 10 contracts, then maybe you can buy some puts also. But directly, if you buy put and if it stays choppy here without dropping much, you may lose money. But if you see that there are a lot of sell orders here, and if you collect, right, you are doing a bear call spread somewhere here, and you are collecting money. And as long as stock stays below that 140, 100%, all the money, whatever you collected, you may do 100 contracts, 50 contracts, and you are not just selling a stock, you are selling and also you are buying, right? In case of any sudden good news. So I am selling 140, but I am also buying 144 as a hedge, as a protection. In case of any sudden bad news or any sudden good news, if stock goes up also, my risk is minimal. If it stays in 140, 141, I will still make profit. If it goes above 144 also, I have very limited risk. So in that way, you can make huge profits 90% of the time when you use. Whenever you are bearish, you have to do a bear call spread. Go above the sell order block and do a bear call. Whenever you are bullish, for example, let us say Tesla. We saw that again, you can see, right? Sell Tesla 340 put and buy 330 put. And you are collecting $200. Sell Tesla 340 put, buy 330 put for Jan 31st, for Feb 21st. So what we are telling is here we are bullish. If you are selling a higher strike put and buying a lower strike put, that means we are bullish about Tesla stock. We right, our indicator is telling that Tesla can go up, and your risk is minimal. If you do right, I did some 100 contracts. The next day it is nearly $20,000, right? Because Tesla stayed above 340, then you will make all that money. So for 131 we did, for 221 we did, because Tesla stayed. So if you go back and see Tesla stock, you can see there is some nearly 60 million buy orders here, right? Big companies want to buy 60 million stocks here. So there is very, very minimal chance for stock to go below this price. So if I do some bull put spread here and you are collecting money, if stock stays up, all that 100% is your money. Even if stock comes here, again it will go up, right? Your risk is minimal. So that is like collecting free money, right? So like that, we are making 85 to 90% success. You can do either a bull put or bear call. For example, if you do a call here, or it is like 50-50 or 60-40. Maybe 60% of the time you may make money, 40% of the time you may lose, because the premiums will be so expensive before the earnings day. Only if Tesla suddenly goes up 40-50 dollars, you will make money. Otherwise, if it just stays choppy, right? For example, Meta. What happened to Meta? It went up and again it came down. So if you see, like, because it is already at a premium zone. So what we did for Meta, if you see, you can see that. So we sold Meta 705 call and bought 707.5 call. That means what we are telling is Meta is already overbought, so it may stay below 705 by this time, by 131, bearish for Meta. So by Friday end, it stayed at 689. That means all that 100% money is yours. Next day morning also it dropped. So we can take some 80% profit and you can let it expire. Then all the credit you collected is yours. So whenever you are bearish about a stock, you do a bear call spread. Whenever you are bullish about a stock, you do a bull put spread for CAT, for Comcast. So like this, 85 to 90% of the time you can make money. How much time you are spending? Only 30 minutes. Before, for example, right, let us go to some stock like NXPI. Right, I enable the chat. If anybody want, you can put your questions. So what do you think can happen to NXPI? Right, we have Monday afternoon, we have earnings. So this is like a free alert for you. What is the high possibility? What can be the lowest price for NXPI on Monday? Where do you think it can go, and then it can bounce back? Exactly, right. Most of you are right. So it can go here and then bounce back. So because big companies, right? If the big companies are spending millions and trillions of dollars to buy the stock, right? They kept their limit orders here. They are telling that, okay, if price comes here, it can. So if I do a bull put somewhere below here or somewhere here, all that money is yours. So you are not just buying a call. If it comes here and stops also, you will make money. If it comes and goes up, you will make money. If it comes and goes little bit below also, you will make money. So all the three different ways you can make money, right? Only if it drops more, also you have a limited risk, right? If I do a 200, I sell a 202.5 put, buy a 200 put. Your risk is minimal, right? So if it stays in between, you will make money. If it stays above 200, you will make money. If it goes below 202.5 also, or below 200 also, your risk is minimal, because you are not just selling a naked put, you are also having a hedge and you are protecting your put sold. So because you are a seller, if it theta decay will help you, implied volatility will help you, the IV crush, because before the earnings, the premium will be so much. So you are collecting the premium. You are not buying and paying the money. You are collecting the premium, and immediately after the earnings, the IV, that implied volatility will get crushed. Until earnings, it may move so much up and down, but after earnings, it will move very, very slow. So that volatility will be lost. So you can take advantage of that IV crush. You can take advantage of theta decay. You can take advantage of the optimism which stays for all the investors before the earnings. And then 90-95% of the time you can make money. So that is the advantage when you learn the concepts. If you buy a naked call or naked put, your risk is 40%, 50%. So you may win 3-4 trades, you may lose again 2-3 trades. So finally you may make less profits. But when you do bull puts or bear calls, you see where the big companies are doing. If I do a bull put here, 90% I will make money. Or if I see there are a lot of sellers here, so price may come here and there is a high possibility for price to go all the way till there. So we can make nice profits with that. So if you do naked call, naked put, you are taking a high risk. You may make high reward, but you are also taking high risk. You may only win 60% of the time, lose 40% of the time if you buy calls. But if you do a bull put spread, your risk is minimal 90% of the time we can make money, right? Let us tell me like whichever tickers you want to see. Right, okay, let us look at PLTR. Right, we cannot look at every earnings, but we can see. So now tell me, what do you think about PLTR? So now it moved already so much from the previous earnings, right? We are at a, so generally there are three different zones for the price. If you see, you are at a premium zone, right? So this is where your discount zone, right? For PLTR, discount zone means price is around $20. Your fair value price for PLTR is $50. Whereas you are at a premium zone now, right? Which is around 82 dollars. That means the stock is much more expensive than what it should be. So what is the high possibility for PLTR, right? There is a high chance for a drop. But if you see here, I can see there is a lot of buyers here. So if I do a bull put somewhere here, I will make profits, right? Because even if price comes to 60, again it will go up. So if I take some 50, some 60, I sell 60 put and buy 57.5 put. All that money will be mine because even if it drops also, there are buyers here. It may come somewhere to 70, 75, or it may touch and then it may stop here. Or even if it comes here, again, these buyers will take the price up because they invested millions of dollars here. They may add another 100 million, try to push the stock price up. So your risk is minimal. Or if I see some big sell order block, right? If I do some 95, I do a bear call. I sell 90 call, I buy 95 call. My risk is minimal because you are already at a overbought area. But my risk here, because I can see nice big buy order block. If I do a bull put here, my risk is very right, or just 5%. If I see a sell order block here, I can just go above and do a bear call spread, and I can make 95% of the time I can make money. So let us go to one more example. Let us go to AMD, right? Again, for PLTR, if somebody want to make money without any risk, you can do a bull put around $60. If you want to, right, take little bit risk, you can do 90 call, sell 90 call, buy 95 call. There is very high chance the stock will drop post earnings because it is already too much overbought. Already it is over, right? It is much more higher than, right? If you see from the previous earnings, right? In the previous earnings, the price was $60, or actually less than 60. From $36, it went to $82. Right? Price will never keep going up in one way. Always there will be some retracement. So there is a high chance for a drop. It is nearly at a double top now. Went up, dropped, and again went up. So there is a high possibility for a drop. But right, you do a bull put, collect lot of money, and you can buy put because you already collected premiums. And now you buy a put. If it drops, you will make lot of money with the put. It will 99% it won't go below $60. So all this is like your free money. And first you are collecting the money, using that money to buy a put. Even if it stays choppy, your risk is minimal, right? If it drops, you will make money with the put. You will also make money with the bull put spreads. Or you do a bear call spread. You go a little bit high, do a bear call spread because it is overbought. The chances for it to go to 90-95 is very minimal. But your lowest risk is do a bull put, then you will 95% you will make money with PLTR. Same thing with NXPI. Let us just look at AMD now. So AMD is right oversold. If you see this, you can see that right somewhere it was here. Sellers took the control, brought the price all the way down. Right, it is somewhere at the bottom now. So if you see, you are at a discount zone. Right, from premium. Right, it was around.
$180. Uh, from $180, right, in the previous earning, from 167, it dropped. It came all the way down. Now it is at a discount zone. So there is a high chance for a price to go up. But again, if I want to take very, very low risk, if I do a bull put spread here, that is my free money, right? I can make 100% chances. If I sell 92 put, buy 90 put, that is my 100% I can make money. Or if you want to take little bit risk, you can even buy, do some 100 put, sell 100 put, buy 95 put. You will nicely make money, right? You have some lot of sellers here or sellers here. You do a bear call spread somewhere here. So price may go somewhere around 124 after earnings. So there are a lot of sellers here, but you are already at a discount zone. So you are somewhere at the bottom, but there are also a lot of sellers. So price may stay somewhere in between 115 to 125. It may stay choppy. So if you buy a call, buy a put, you will lose. But if I do a bear call here, or if I do a bull put here, 95% you will make money. So that's how, right? All you are holding is you are buying on Tuesday morning, Wednesday morning, you can take the profit. So using this, we are making 85 to 90% of the time. We are making nice profits every day with earnings. So again, there will be hundreds of companies reporting, right? As I said, every day you will have minimum 10 opportunities, 10, 15 opportunities. So you can go before 30 minutes. You can go, you can see, okay, what PLTR is telling me, what NXPA is telling me, what AMD is telling me, what Uber is telling me. And if you use the strategy which I shared, 85, 90%, if there will be always one or two exceptions, like for example, IBM, it was showing bearish, but it dropped. So sometimes if you give some little bit time, even though it may, for example, IBM, there were some sell orders, but suddenly it went up. But we took for the next Friday expiry. If we give some more time, there is a high possibility IBM, there is a huge gap fill after earnings, right? 1 or 2 days after earnings, it will go up. Later, it will drop. Then, if you wait, you will make money on those which are in the unrealized. Or next day, you can add few more to your existing position, and you can convert that losing trade into a winning trade. But that's why don't put all money into one trade, right? Use 5%, 5% in 20 trades. Even if one or two trades go in the other direction, 90% of the time you can make money if you use the strategy which I suggested. You have to go and look where the big companies are buying, big companies are selling, do a bull put spread close to the buy orders, do a bear call spread close to the sell orders. If you buy calls or puts, you are taking a high risk. You may make money on some trades, but you may also lose full money on the some trades. But when you do bull puts or bear calls, your risk is very, very minimal and your time investment is right. All you are doing is no need to look at charts throughout the day. All you need is 30 minutes before the close. You go and see what, because in last 30 minutes also there can be some sudden, right? Some big companies may come and buy PLTR stock. Or if I see some big sell order block, right, at Monday to 2:30, then I will have full confidence to buy the puts. If I see a big 2 million sell order block at 2 p.m. Central or 2:30 p.m. Central, then I can confidently do a bear call. I can confidently buy the puts. I can confidently go and buy bull puts here. I can confidently buy bear call spread here. I can buy the 85 put of PLTR. So because until that last 30 minutes also companies may get some inside information, suddenly we may see big buy orders or sell order blocks, right? You will get all that from the order book. The order book will pull this price pulse indicator, will tell you that okay, we got a sell order block, there is a big huge sell order block or like that. So but there is very high chance for PLTR to drop on Monday afternoon. And yeah, so the best thing is, even though you are a full-time employee, you are doing a job or anything, all you need is spend 30 minutes. You see what is the, okay, this is my calendar. This is my indicators. Okay, now I'll use this indicator. I see that, okay, it is already at a premium zone. And I see there are a lot of buyers here. Okay, I'll do bull put spread here. Or I see a lot of sellers here. I'll buy a put. Or I'll do a bear call spread here. Like that, all you need to do is it takes 2 minutes for you to analyze whether you need to do a bull put, you need to buy a put, you need to do a bear call. You are done with that. Now you go back and check. Okay, now what is the next one? KD. Okay, now you will go to KD. Right, for example, right, we for Monday morning we have TSN. You tell me like which one can make money, which one is a low risk strategy, or so do you think price can go up or price can go down? Or if it goes down also, what is your lowest risk? Right. There are a lot of buyers here, right? You are already at a bottom, close to the bottom, and there are a lot of buyers. So if you do a bull put here, your risk is minimal, right? Because price comes here also, again, these buy orders will push the price up. Suddenly, even earnings are bad, even if it comes down. So even if price comes and stays here, you will make money. If price goes little bit down of this, you will make money. If price goes up, 100% of the money you collected is 100% yours. So in all different ways, you can make money. Only if it goes so much down, you will lose little bit because you already have a hedge. If I do 50-52 bull put or 50, right, 48-50 bull put, you are collecting money and 90, right? Just like you are like an insurance company. You are collecting money from millions of car owners. Maybe five people, 10 people, or 5% only may get into some accident. Other 95-96% will drive safely. They won't have any problem. So who will make more money, right? In that scenario, whether the insurance company will make more money, or in the same way, you are selling because you see that there are a lot of buyers doing it. You are selling it, then 95% of the time you will make money. Only 4-5% there is a chance to lose money. So that strategy is giving huge results. As I said, we are making huge gains every day, or 90% of the time. You can see, right, every alert I share in the premium channel, in the earnings fund, all those groups, and we are making 85 to 90% using that strategy. So I thought of sharing with you all that instead of buying naked calls or naked puts, you, right, all we want is we all of us want to make more money, right? So instead of just buying naked call, naked put, if you do bull puts or bear calls, your risk is very, very minimal. You have higher chance of, and you don't need to put lot of money also because you are buying a call and also you are selling a call, or you are buying a put, you are selling a put. Your investment will be less. And next day, you may make 50, 60, 70, 80%, or you can keep 100% of the premiums. And IV crush, as I said, generally before earnings, there is a component called as implied volatility built into your option premium. Whenever that earnings is over, all that money is yours, right? So if you are selling a premium and collecting money, suddenly the price stayed at the same price. They reported good earnings but bad guidance, or they reported right, the report was not as expected. So it stayed at the same price. If you buy call, you will lose. If you buy put, you will lose. But if you do a bull put or you do a bear call, you will make money because of the IV crush component. So you have high return of investment. No need to look at the charts throughout the day. All you need is 30 minutes and then you can make huge money. So again, how to take advantage of this where we are making 85-90%? One is, right, one way is you can be part of this earnings alert channel where we give you the alert, right, in the last 30 minutes. Even if you are just, you can take trades between 2:45 to 3 p.m. You may you may right, you may be busy throughout the day. If you can, right, even though I give at 2 p.m. or 2 for 2:30 p.m., you can take trades in the last 10 minutes of the day, and next day morning you can close the trades. That is one way, right? Or you can subscribe to the indicators, right? We have all these great indicators which will help you to make money with earnings with the prop firms. So you can subscribe to the indicators and you will get access to all this what we are looking. and you can take your own decisions, right? You may want to become independent, so that even I am busy, I did not provide an alert. You can look at all the charts well before, and you can be ready for the coming week. You can see that there are nearly 100 opportunities in the coming week, right? There are a lot of opportunities like Uber, PayPal, AMD, Alphabet, Snap, Pfizer, Roadblock, so NXPI. There are so many good opportunities. So whenever you have time, you can go and go to each chart, look like, okay, is it close to discount? Is it close to premium? Are the buyers, big companies buying or big companies selling? Then you will become completely independent, and you can yeah, because right, I may not give all 20, 30 company alerts. I may see like 4, 5 companies and I may give it. But when you are becoming independent, if you see something good, you can take it, right? That is, so you can go to this link tree slash right choice one. So if you go here, so you can, one way is you can click on this, you can get the indicators access. So you will have access to the indicators, or you can go here, click on the options premium channel, and then you can become part of the channel, and then you can receive all the SPX. Same concept to use for SPX every day, right? If you see a big buy order block, right? For day trading, we use 5 minutes. So if you see a huge buy order block, then you do a bull put spread below that, right? For example, we saw right on Friday afternoon, right after a huge drop, we saw a big buy order block here. Then we did a bull put spread here, because if price comes here, all these companies are trying to take the price up. So if I do a bull put spread here, right, then your risk is nearly 0%. So if you see right on Friday, options premium. So so we saw the buy order block. Okay, sell 60-20 put, buy 6015 put. Sell 6015 put, buy 6010 put. Sell 6020 put, buy 60. That means if price stays above 6020, all that money is yours. If price stays above 6015, all money is yours. If price stays be above that, all money is yours. 95% you will make gains on all the above, right? And in the same way, so if you see in few minutes, right, we made nearly with 6075, 6085 bear call. That means if price stays below this 6075, you will make all the money. If price stays above 6020, you will make all this money. So because there was a huge sell order blocks here, lot of sellers, big companies are trying to sell. Here, lot of big companies are trying to buy. So if I go little bit above and do a bear call spread, if I go little bit below and do a bull put spread, we are making money on this side, we are making money on this side. If you buy calls and if it stays choppy, you will lose money. If you buy puts and if it stays choppy, you will lose money. But if you do bull puts or if you do bear calls, you are making money on both the sides. So, because when big companies are putting millions and trillions of dollars, they will not allow this to break. You are already at a discount zone. It already dropped so much on the day, right? If you see this. So when we started on the day morning, we did a bear call because we saw that price is already at a premium zone. So if you see the morning, so yeah, sell SPX 6125 call by 6130 call. So we did a bear call spread. Sell Tesla 420 call by 425 call because we saw a huge sell order block for Tesla. It went so much up until 420 plus. So if you see here, Tesla went all the way to 420. It was at a premium zone. Then you do a bear call here. Then all the money is 100% yours. If it comes all the way to the bottom, to the discount, you do a bull put now. Again, if it goes up, all that money is yours. So instead of taking risk with naked calls, naked puts, if you wait for a proper level and when you are at a resistance, you do a bear call spread. When you are at a support, do a bull put spread. Every day, if you use this strategy just with SPX, you can make minimum $400-500. So even if you have a small account, if you have a 25K, 30K account, you can easily make, right? Wait for a discount zone with big buy order block, you do a bull put. Wait for a, right? Whenever you have a huge sell order block, you do a bear call here, you will make money. So as I said, right, morning when we started, we saw there is we are already at a premium zone. We went 61.25, 60.30. So by end of the day, all that money 100% is yours. So just if you use this concept either with SPX, with Tesla, with Nvidia, or with earnings, right? With earnings, you look at higher time frames. With SPX, Tesla, Nvidia, you look at 5 minutes, right? If you want to make money on the same day. If you want to take a swing trade, you go to 1 hour and then you wait for price to go to the premium in 1 hour, and then you do the same thing, right? In 1 hour, it went all the way to the top. There is nearly 501 million sell order block. Sellers are trying to sell SPX at this point. So that's why you can see ES, NQ, everything dropped so much. They came all the way where there are buyers, again it is going up. So if you want to swing trade, use 1 hour time frame. If you want to day trade, use 5 minutes time frame. If you go above and do it, right, you're doing bear calls. So you can see how confidently I'm taking 300, 400 contracts. So we did bear calls, SPX 6125, 6130 bear call. You can see 7,000, 11,000, 17,000, right, within few minutes. At the same time, you can do with SPY, QQQ, TQQ also, because if SPX drops, then all these things also drops. If you have a Robinhood or some account where you don't have SPX, you can do SPY, QQQ like that. So even right here also with SPX and all these things, we are making nearly 90% of the profits, right, with earnings and also with SPX, Tesla, Nvidias. So all we need is, yeah, we also have another tool which also sees like last 30 years of data. It tells like, okay, NXPI, last 30 years, it is bullish. So our price pulse is telling buyers are buying it. NXPI, this chart shows that it is generally bullish in last 30 years during this time. So now we have 100% confidence. I can confidently go and do bull puts for NXPI tomorrow and make a lot of money. So like that, when you have powerful tools, strong tools, 90%, 95, right? You are not gambling. You are not trading with emotions. You are trading with a logic. You are trading with a systematic steps. You are trading with a proper plan. You see that you have lot of sellers here. It already moved to overbought area, right? So what I'm doing, I'm not even buying puts and taking a risk. I am just doing a bear call. That means if price stays below that, I'll make full profit. If price comes to that, also I'll make profit. If price comes a little bit above, also I'll make profit. So you have 90% chance of making money. If you see a huge buy order block, I go below and I do a bull put. If I see a huge sell order block, I go above, I do a bear call. Every day, $400-500, you don't need to worry about your office politics, your jobs, what Trump will do, all these things, right? All you need is take time to understand, learn, practice, and then you have unlimited potential. As you get more and more confidence, now you may start with one contract. After 1 week, you do two contracts. After 4 weeks, you do 10 contracts. You will gain more and more confidence, and you can, right, in your job, you cannot double your salary, triple your salary. But here, as you gain more and more confidence, experience, instead of now you see that, oh, there is a lot of big buyers are buying. So now if I do and do a bull put, as long as price stays above that price, all the money you are collecting is yours. If you see a big buyer, a sell order block, you go and do a bear call spread. As long as price stays below this price, all the money collected is yours. So that's it. All we need to do is, and you can do it with stocks, you can do with futures, even in futures also. For example, if crude oil is somewhere at a, right, let us say it is at a proper support. There are a lot of buyers here, right? Price came here, touched it, and went up. So if I do a bull put spread, I can, right, to nearly 23 hours, 24 hours a day, you can do futures, options on the futures. You can do and do go ahead and do a bull put spread here, you will make 100% profits. Or there is a big sell order block here, right? If price is coming close to 74, and if I do a bear call spread here, price will touch that and then drop. So as long as price stays below this, all that money you are collecting is yours. So like that, all you need to do is look at where the big companies are buying, look where big companies are selling. If big companies are selling, you do a bear call spread here and collect the money. If big companies are buying, you go and do a bull put spread here and collect the money. So even if price stays choppy, you will make money. If price stays below this, you will make money. If price stays above this, you will make money. So you can make money this side, you can make money this side without any risk, right? If you buy a call and if it stays choppy, you are losing. If you buy a put and if it stays choppy or if it goes up, you're losing. So as a buyer of call, buyer of put, you have only one chance to make money. As a seller, as a, right, if you are doing a traded spreads, especially if you are collecting money by doing vertical credit spread, right? It is not debit spreads, but credit spreads. You have nearly 80 to 90% every trade you take, you will make money. All you need to do is wait for a level. Okay, this is right. The price came here, buyers are taking it up. Or price will go here, again it will drop. So you have, if you do with proper knowledge, whatever you make in IT job, you can make it in much less time, right? Whatever you make in 1 week, you can do it in 1 day here. Whatever you make in 1 month, you can make in 1 week here. So that is the potential, but you need to take time to learn, understand, and then execute the strategies. And don't go with a grid. Don't go on day one. Don't go with a huge position size. Always maintain a position size, right? Even with earnings also, even though NXP is looking very good, but still I'll try to keep it to 5%, right? If I have a 100K account, I'll use 5,000 as my risk. If I see PLTR might drop, I may do a bear call, but I'll use 5,000 because you never know. One out of those 10 may go up so much, may go down so much, uh, right? Even though a lot of indicators might show that it will drop, but there is always a risk. So when you use proper position size, if nine of your trades are making money, even if one gives a loss, that also can be a small loss. When you are doing trade spreads, your losses can be small and your gains can be 100%. So that's how, if you follow and if you follow the strategies, you will win 85 to 90% of the time. You can make money. So again, as I said, one way you can get the alerts, you can make money. Second way, you can get the indicators, you can make money with SPX, you can make money with earnings, you can make money with the prop firms, right? Same, we have prop firms where you draw the level here, right? Okay, crude oil, I see that there is a huge sellers here. You draw a level, right? You just draw a line here and you can say that, okay, this is a huge sell order block, right? I can put a mark here or I can add a text, right? There is a sell order block. So now when I go to 5 minutes, I'll wait for price to touch this. Whenever it touch this, you will immediately see a big drop. Then you take a short, you will easily make $300-400, copy the trade into 10 accounts, 20 accounts. That is your 3,000, 5,000 without investing your own money. That is called prop firm trading, where you don't need to use your own money. You can use the prop firms. Initially, some prop firms will do evaluation to see whether you can make money or not. Some prop firms will directly give you the funded accounts. If you have 10 funded accounts and if you wait for the price to come to this level, 99% it will drop from here because already in 5 minutes there is a lot of resistance. But if it comes here, right, for example, on Friday morning, we saw that in Tesla, In 1 hour, there is a huge resistance. We went ahead and took the bear call spreads. So your 1 hour resistance will act as very strong resistance, and that will make huge profits. So if you draw levels, you go to ES, go to 1 hour, and wherever you see a big resistance or big sell order block, you put a line there, right? For example, if ES comes to this price 61.59, there can be a huge drop again. There can be a 100-point drop. If you wait for this level and take a short here, you will make 5,000, $10,000 with one contract. Or here there is a big buy order block. So now today evening we may see a bounce back, right? Because on Friday it went so much down. Today we may see some retracement. It may go back little bit high. So all you are doing is take trade in a prop firm where you are not risking your own money, and you copy that into 10 accounts, 20 accounts, 30. As you gain more confidence, you can keep on adding more and more prop firm accounts, and you can make huge money. So all you need to do, go to 1 hour, put your levels, but take the trades in 5 minutes. Right? If it is a personal account, you can do it in 1 hour. You can take a shot and you can wait. But in for prop firms, you use 1 hour to draw your levels, and then in the 5 minutes you take the trades. If you have a 1 hour resistance, that is the best one to go short on 5 minutes. If you have a 1 hour support, that is the best one to go long in the 5 minutes time frame. So if you follow some of these things, there is unlimited income potential. Your IT jobs may never give that sort of income, but all you need to do is take time to learn, practice, and then if you follow the strategies, you will you we all can make huge money without taking a risk, right? Especially when you do on prop firm, your risk is you may buy a account for $10, $15. If you lose, your loss is only $15, but if you gain, you may complete get into a performance. There are some prop firms like Take Profit Trader. Every day at the end of the day, you can take $1,000, $1,500, $2,000, right? All you do is two three trades, good trades, wait for good setups, take the trades. At the end of the day, you request for the payouts. Like that, right? You want 1 or 2 payouts from your employer, or you want to get, you have 20, 30 prop firms. You are looking at the same symbol, same NQ, same ES, same crude oil, same gold, and you can request payout from all these, correct? There are some of our members who are making 20 payouts every month from Tradeify, from Take Profit Trader, from different companies, because they took time to learn, practice. Now, whoever was making 5,000, 6,000 per month, they are making 70K, 80K per month now. So it's all about taking time to learn, practice. Everybody will make some mistakes in the initial days. You have to learn from your mistakes, and if you continue, you will be very successful. So yeah, that's it, everyone. I wanted to share. We can make right with earnings or with futures, with prop firms or with individual accounts. There is lot of money to do, lot of money to make. Only thing is we need to control our emotions, wait for right levels, and wait for right to use our right strategies, and we can make 90% success. Right. Again, there is no strategy or something 100%, right? Sometimes even the 1 hour was bearish, in 5 minutes there can be retrace, right? Here, if you see, yes, in 1 hour it is bearish. It came all the way here and then started bouncing. In Tesla also, generally Fridays they bounce it in the last 30 minutes. But on Friday they took it little more down. So here we made money with the bear calls. Again, we made money with the bull puts. So there'll be always, yeah, right. All you cannot, nobody can, we cannot win 100 out of 100%, right? But if you can win 85, 90%, and if you maintain your position size, you'll make nice profits at the end of the day, right? So what I'm trying to tell you is, so for example, if I go to PLTR, I see in 1 hour where I have my big sellers, right? Or I see, for example, here. In 1 hour, I have lot of buyers here, 49,000 buyers. So I can go to this and I will put something in the green color because that is a support. That is lot of buyers. That means price will come here and can go up huge. Then I can add 1 hour support with 49.5 order block. So now if I'm trading in 5 minutes, right? You are planning in higher time frame, but you are trading in the smaller time frame. So if price comes here, I can buy calls, I can buy stock. There is a high possibility for price to go all the way up. Or if I go to gold, I'll go to 1 hour. I'll see in 1 hour where the buyers are buying or where the sellers are selling. It came all the way down in the last 30 minutes, it bounced. So if I see that this is my huge resistance, so I can always draw a line here. If it is resistance, I'll put it and then I can add a text here because the same thing may not appear on when you go to 5 minutes. So if I go to 5 minutes, whenever price comes to this level, that is my 100% confidently, you can take a trade, you can short it, you can make huge profits because your 1 hour resistance is much more stronger than your 5 minutes resistance. Your 1 hour support is much more stronger than your 5 minutes. Sometimes your 5 minute support resistance can break, but if you have a 1 hour support, you are watching a 1 hour support in a 5 minute chart. Whenever price comes there, it will definitely bounce because in 1 hour there will be lot more buyers, lot more sellers compared to a 5 minute support or 5 minutes resistance. So if you see there is a lot of buyers here. So if gold comes to this price, there can be a nice bounce. Or if gold comes to this price, there will be a nice bounce. So if it comes here, then definitely I'll make nice profits with my prop firm accounts. I can take right? I can take two contracts, three contracts. With one trade, I can make $300-400. With one contract, I can make $300-400. So you just go and draw your levels even before the market opens. You go to 1 hour and mark your levels in the 1 hour. And you can also put an alert, right? I can put an alert that, okay, if silver comes here, just send me an alert. So if whenever silver comes here, I'll get a notification. And if it comes here and then I get a buy signal, I can just go long within few minutes. I can make profits on the silver long because there are a lot of buyers here. Whenever price comes here, it will go up. In the same way, if I have if price comes here, I can put an alert. Whenever silver comes here, it will drop. So whenever I get a notification that silver is close to this price, if I go short, I'll easily make $300-400. So it's all about waiting with patience for the right levels. So this is your strong support level. This is your strong resistance level. So if I go to 5 minutes, I'll wait for this price or I'll wait for this price. If it goes here, I'll make money. 99% I'll make money if it goes here. Or 99% I'll make money if it comes here, it will go up. If it goes there, it will come down. So that's it. If so, you put all your levels before the market open for all the tickers, and you will get a notification for any ticker. It may right instead of taking somewhere in middle, you are either taking at a resistance or you are taking at a proper support. You are not buying somewhere or selling somewhere in between. So if you do that, you can do copy the trade into 20, 30, 50 accounts, and even though you make 200, $300, because you can replicate your trade in so many accounts that one single right if you spend 1 hour 2 hours in the evening 7 p.m. to 9 p.m. generally silver gold platinum copper they will drop a lot. So in those 2 hours if price comes to that 1 hour support or 1 hour resistance you have very huge opportunity. You can easily make $300-400, copy that into 20 30 40 accounts and you can make and just repeat that every day, right? Just go and put your 1 hour support 1 hour resistance levels, and whenever any of these 30 40 tickers, right? It can be Ethereum, it can be Bitcoin, it can be silver, it can be gold, it can be Russell's, ES, it can be anything. If they go there, touch that level, immediately it will bounce back. So 5 minutes also can do 5 minutes support, 5 minute resistance, but Sometimes if there are too many sellers, 5 minute support can be broken. But if it is a 1 hour support, definitely there will be too many buy orders there, and then the chances of it going up is 95%. So before market opens, use 1 hour time frame, use price pulse indicator. Then you see where you have big buy order blocks, where you have big sell order blocks. Put your levels there, or put your line there, or create a notification. And then whenever you receive the notification, there is very, very high chance for you to make nice profits. Yeah, that's it, everyone. So again, as I mentioned, you have two ways to right. One is you can follow the alerts, right? We have forex channel, we have futures channel, we have stocks channel, options channel. That is one way where you can make money, or you can get the indicators, you can learn, then you can become independent. You don't need to wait for someone to tell you when to buy, when to sell. You can learn everything by yourself, and you can watch the live sessions, and then you will understand after a few days that okay, he is buying it here because we are at a discount zone, a lot of big companies are buying, that's why he is buying calls, he is doing bull puts, he is doing so and so. Or we are at a premium zone, there are a lot of sell order blocks, that's why he is doing a bear call spread, or he is doing a put, he is buying a put, or he is shorting NQ, he is shorting ES. Like that you will gain confidence after 2 3 days watching the live session, and then you don't need to wait for me. You can trade in the mornings, you can trade India stocks, you can trade India options, you can trade futures, currencies, commodities, because the logic is same for anything. Once you learn the logic, you can do whenever you want. If you want at early morning 4 a.m., if you are getting up, you can do at 7 a.m., or you can do at 11 p.m. You don't need to wait for alerts. When only analyst is available, he may give the alerts. But when you learn, you are 100% independent. You can do whenever you want. Right? That is the power. When you learn a systematic approach, you can make huge money. So, yeah, if anyone got any questions, please let me know. Uh, yeah, hi Ramanan. Do you have any questions? Yeah, don't ask me to go to each and every ticker, right, where earnings are there. But yeah, if you have any other questions which I explained, yeah,
Yeah, hi.
let me know.
You're able to
Yeah,
hear me?
yeah, please go ahead.
Okay. So in the discount and premium zones, there are some numbers associated. I just wanted to understand what are those numbers. Like, if there is a week low 46, like for example, I take AMD's example.
Mm-hmm. Okay.
In AMD, there is a discount zone in daily time frame.
Mm-hmm.
It shows near the discount zone. If you
Right.
look
That means
on the right side,
the
on the right
strong
side.
low. Right.
So what are these numbers? It shows the same number in weak low and strong high, and then there is 57% and 43%. What does it signify?
That means it is telling that there is nearly 57% of buy orders took at this place, at this point. But looking at the number of sellers at the top, it is telling that this low can be broken. If it is a strong low, that means this low will retain. That means price will come here and go up. But if it is a weak low, there is a high possibility that this low can be, it can break this low and come little bit down, and then it may move up.
Okay. So strong low and weak low is basis historical transactions. Is it? How does
Yeah,
how?
historical or based on the number of sellers currently in the market. If there are, right, you have lot 35 million sellers, you have sellers here, you have sellers here. So based on all those things, it is telling that price can drop further, right? This low may not, this is the previous low as of now, but it is
Okay,
telling that this is a weak low. It can go further, little more down, and that's why I told you, right? If we do a bull put here, your risk is minimal.
got it, got it. Okay. So and this buy order blocks and sell order blocks are a little historic, right? Now, for example, here when there are 39.22 million sales sell order block, those are at that point of time there was a sell. Basically, it's
Those are
is it a
those
sell
are
order
limit
block or
orders.
we?
Those
So
are
those are
limit
limit.
orders placed by, right? Sellers will not. do market orders. They will always put a limit order. That
Okay.
means they are
Okay.
telling that, okay, if AMD comes to this price, I want to short it and make profits. So
Hmm.
still there are a lot of orders waiting there to be filled. So whenever price
Oh,
goes there, it may drop again.
oh, these are orders right now in the system which are being shown,
Right,
is
in
it?
the order book, right.
This is an order book. And then what is that 19% associated with that?
That means around this right, whatever, if you have some thousand transactions here,
Hmm.
19% of sell orders took around this price.
Oh, okay.
17% of transactions took at this price. So that is like where you have lot of, there might be 100 sell transactions, but around this price, nearly 20% sell took place. Around this price, 17% of selling took place. So that means it is very strong resistance. There is very strong resistance.
Sorry, Kishore, sorry for re-asking this question. So this is a historical sales order which has happened there, or this is a sales order block which is present right now?
This is sales order. So whenever it touches the first time,
Uh-huh.
right? Assume that you put some 10 orders,
Hmm.
right? You put some 10 sell orders, limit sell orders.
Okay.
But all your 10 may not fill at same time. First
Got it.
time when price touches, let us say it filled only 2 orders. So now your 8 orders are pending there. It filled the 2 orders, price came down.
Hmm.
Right? Instead of 10, think like you have 10 million. You place 10 million sell orders. So not all 10 million can get filled at the same price. Only 2 million got filled. So
Got
again,
it.
next time when it goes up, another 8 million will get filled.
Okay. Okay.
So yeah, these are the current orders which are sitting in the order book. So that will give you confidence that, okay, if AMD price cannot go above this. If I do a bear call here, 90, right, again, right, we have to watch before 30 minutes. Because in that 30 minutes, if there are a lot of buyers, the sell orders may get cancelled or may disappear. So before
Okay.
30 minutes, before the earnings, if I see still the sell orders are still here, if I do bear call here, 99% will make money.
Got it. Okay. Okay. So basically, those are orders which are still present in the system. Okay. Fair
Right.
enough.
Yeah. Okay. We'll go to the next one. Yes, Rini? Yes, Srinivas, are you there? Hey, Ganesh, do you have a question?
Yes, Kishore. I have a question. If you go to PLTR, right? So it's the middle of the candle, right? So when we have to take the order, like for example, bull put and bear calls, right? So we have to wait for that zone, then only we have to place that order.
No, no. For example, right now I can see that it is at a overbought area. There
Okay,
are
that's a
some
day
buyers
one, right? Yeah. So like if you go 5 minutes or 1 hour,
in.
we see it somewhere middle.
Right. For example, if I am in 5 minute support,
Correct.
then let us say you see some big buy orders here.
Right.
When price comes to around 80, you can do a bull put here.
But before above, we have a discount zone. We have
No,
to
but
wait.
this, yeah, you have to wait. Right. Sometimes it may come to discount and further drop where the buyer, right? It will always come and grab the liquidity.
Okay.
So it may not just come to discount and start moving up. Your discount zone is more like a dynamic trend line. The discount
Uh,
zone can move little bit. So that's why
oh,
if you see a discount and also you see buy orders, that is the best time to take a trade. Or
okay.
you
So
see
that's
premium and also you see the sell order block, that is a good time to take a bear call or to buy a put.
so the candle should touch the block. Then only we have to. Now it's the
Right.
middle, right? So I have to wait either up or down. When I touch
Mm,
it, then only I have to take the position.
that is right. Yeah. If you buy in middle, you are taking a big risk. But if you wait for the right setup, your risk is very, very minimal.
Oh, okay. Makes sense. Okay. Thanks,
Yeah.
Kishore. So but first, before that, I have to check 1 hour and then 5 minutes. 1 hour I have
Right.
that got
Again, right. If you want 100% confident trades, always go to 1 hour. put your levels, and then because your 1 hour is much more stronger. If it comes here 99%, you'll make money.
Makes sense. Okay. So once market open, I have to wait for 30 minutes. Then I have to mark the 1 hour candle or
No,
8:30
no.
or so.
Before market open itself, you can mark your right whatever are your favorite tickers. You can go to your top Nasdaq 100 stocks or real SPY stocks, and whichever stocks, like for example, you like to trade Tesla or Nvidia or Microsoft, right? You just go to those stocks and put these levels before the market open. And when
Okay.
market opens, you see that price is right. You can always create alert. You don't need to go to each and every chart. You can always say, okay, if PLTR comes to this price, let me know. Or if
Uh,
micro team comes to, let us see where we have support for team. So there is a huge resistance here. So I can go here, I can put a resistance and I can say, in case if team goes there, let me know. Or in case if team comes here,
okay. So it is chances to break the below support.
right. But if you have 43,000 buyers buying here, the
Uh-huh.
chances are only 10%.
Okay.
So if right now you are not trading in 1 hour, you are trading in five. If you see that uh, price came all the way here and you see some good green candles, you see T5 came all the way down, started moving up. Then now you have 100% confluence. Your T5 is telling price will go up. Your candles are turning from red to green. Your trend is changing to bullish. Momentum is changing. So now, right, you have 95% chance of success. Or
Okay.
you
And
can put your stop loss somewhere here, right? Your risk is minimal now. If it starts going up, you'll make huge money. Otherwise, if it breaks it, you take a small stop loss and you go to the next support.
okay, makes sense. Okay. And we have to wait for T5 also touch the support.
Right.
Um,
Yeah. Generally, right? If price is coming all the way here, this also comes all the way to the bottom. And when it touches this, it will start going up. T5 will start going up. Then you got 100% confidence. So
okay.
yeah,
Okay.
yeah.
Okay.
Right. Yeah.
Uh,
If we just wait for those 95%, you'll make money.
okay. Okay. Sir. Thank you.
Yeah. Um, yeah, Ara, do you have any questions? Yeah, Murli, do you have any questions?
Hey Kishore, can you hear
Yeah,
me?
yeah, please go ahead.
So couple of things, on your RC top trend, that is one question I have. In terms of, it's so cluttered. Actually, I'm trying to understand like how to really use that indicator. So that's one question. But the other important one is regarding the RC, the options premium channel. It's not working, so I've been trying to ping you since yesterday, but I think you didn't check my messages. If you go to your subscription page, if you don't mind.
No, right. Let us focus on any questions related to earnings or right. I'll help you after this meeting.
Okay,
But
yeah.
yeah,
So do you
no.
want to?
So did you
Yeah.
go to options premium underscore bot?
Yeah. It opened that bot for me, a Prem bot.
Mm-hmm.
Then in the Prem bot, if I go click on the check, the debit, credit
Right.
debit button,
Mm-hmm.
it says
Right.
this doesn't exist. Not the options. I mean, I'm not subscribed, so I won't be in this channel. It opens me the Prem bot. That's the one it's opening for me. And when I click on credit debit card button, it says this. I'm
Mm-hmm.
clicking. The subscription plan is not available anymore. That's what I
So
keep
you
getting.
have to go to options, yeah, under
Prem
PREM
bot. Yes,
underscore
yeah.
bot,
If you see,
and
you
then
should.
you have to go to menu and select plans, or you'll see a plans button. Once you click
Yeah,
on plans,
yeah. Can you?
you will see like this. Then you have to click on monthly plan, and then you
Okay.
have to click on
Okay.
credit debit card.
Okay. Got it. Okay. Yeah, I think I was probably That's where the problem is then.
Yeah. And then you just click on subscribe.
Okay. Sure. Okay. Thank you. Yeah. Probably on the other one, when it comes with the bot, when I click there, that's the problem I was facing. So I didn't type the plans one.
Right,
Okay.
right. Yeah.
Sure. Okay. So
Sure.
on the indicator side, is it okay? You can talk, or maybe you want to limit that?
I'll help you during setup session. You have to just do some adjustment, then it will work fine. Yeah.
No, it's working, but
Yeah.
not interpretation problem. That's like
Right, right.
really
Yeah.
talk
I'll
to
explain it
uh,
in the setup session.
okay, no problem. Yeah, that's it. Yeah.
Yeah. Yeah, Sushil, do you have any
Yeah,
questions?
hi. Yeah, hi, Kishore Garu. So the numbers, what you're getting on the chart, the 49K, how do I get those numbers? Those I need to buy it?
Right. You need to, once you have the indicators, once you subscribe to the indicators, you will see all that information.
Okay, so that was the thing. And then the sell order block, buy order block, that also I will see. Are there
Right.
numbers for that too?
Yeah, you will see all that information once you subscribe to the indicators.
Okay, and you already you've given so many trainings, right? So you already have recorded sessions how to use the indicators, right? You can share that also, right?
Right. Yeah.
I think I'm getting lost. Maybe somebody else wants to take a question. Maybe I'll start looking into the indicators and your recorded sessions. Actually, I recently joined, in fact.
Sure, sure. Yeah.
All right. Yeah.
Kishore, I have a quick question. On the price pulse one, right? The blue line turning to red, that is the
Yeah.
confluence with the T5 indicator, right? T5 is
That,
showing that red line,
right.
and
Yeah.
then the blue turning red. Those are the two confluences, right?
That is right. Yeah.
Okay. And from the order blocks and sell blocks, right? Maybe, you have the no, the premium, for example, the top red one.
Mhm.
That an order block? Order blocks are small and rectangle or like a long rectangles, like entire screen.
So
So
this
is
is
that
like very strong order block, right? You see
Hmm.
6,000 sell orders here, and you
Okay?
are
So
also
that's
at a
the actual premium
right.
in case.
Yeah.
Oh,
This
this is a premium.
premium plus sell order block is the best opportunity,
Best offer. Yeah. Okay.
or
But
discount
many
plus.
times, yeah. Many
Yeah.
times we don't see that. So what should we do in those
You
scenarios? Like
ignore that. There are
the
thousands of
premium.
stocks. Yeah. Right. We don't need to, because when it is a premium, but if you
Mm.
don't have sell orders, that means still trend is continuing. Buyers are
Continue.
still trying to go up. Sellers are not ready to sell it off. But if you see premium and also a sell order block, that is the best time where you can, if you do bear calls, you will make a lot of money. Or you buy puts, you have
Yeah.
50-50 or 60% chance to make money. 40% if it stays choppy, you
Mm.
may lose. But yeah, if you
Oh,
do bear calls, 90-95% of the time you'll make money.
okay. I see. So then basically in those scenarios where the cell block is not there, but just we are at the premium, maybe avoid them, right? Maybe look for other tickers.
Right. Yeah.
Okay. Okay. Got it. Yeah.
Kishore Garu,
Otherwise,
can I ask you something? Sorry.
mhm.
So how do you determine the discount zone and the premium zone? That is.
The algos will do everything. We don't do anything. The algos will see where the buyers are buying, where the sellers are selling, or where, right, based on the fib levels, all those things. The algos will point all
So,
those things for us.
so those
You don't,
indicators I buy, that will show me that.
right. Yeah.
Okay. So those are the 5 indicators you mentioned, right?
Right.
Okay.
Yeah. So, right, we don't need to manually do everything, do use fib tool, use all those. So, the indicators automatically plot your support, resistance, where buyers are buying, where sellers are selling.
Yeah, later can you whenever you get a can you post that where I can buy that? I know you showed it a couple of times actually. Later maybe not nothing.
Yeah, you can go to this link tree / right choice one, and you
Can you
can.
post that? Where is that link actually? Link tree. It's in the.
Yeah, I'm sharing it in the Zoom chat.
Okay. All right. Cool. Thank you so much.
Yeah. So Apple chart for Friday, you can see that Apple, it went all the way to the top, right? You are T5, you are at a huge sell order block here. A lot of sellers are selling 486,000, went to
Okay,
the
Kishore,
premium
quick
zone.
question.
Yeah.
In the 1 hour time frame, you draw a line, right? For Apple, it's a
Right.
big box, right? So where we can draw a line exactly,
Right.
like
Wherever you see the sell order block around that price, right? If you see 486,000 around 246, 247, you just put a line there. So
oh,
if
it is inside the first entering the box, right?
right, yeah, around that. Then if you see now, if you go to 5 minutes, in 5 minutes you see right. If it starts dropping, your T5 starts dropping, then you got your confluence.
Okay, got it. So now it's a discount on Apple, so it will go up.
Right, yeah. Tomorrow it may go up. Right. On Friday it came all the way down. If you bought puts, that would have made some 400-500% or more.
Okay.
It went to 248 and then it dropped so much.
So these indicators are every month have to keep on paying for the indicators?
Right, this is monthly, this, yeah.
Okay, all right. Yeah, let me understand. Maybe I watch a couple of your sessions, then I'll get it.
Yeah, right. Every day, as I said, every day we can make 300-400. Just if you use SPX, that is good enough. Even you don't need to go to 100 different stocks.
Yeah, yeah.
Just use SPX and take the trades, or use Nvidia, or use Tesla or Apple. Any one stock or one index, that is good enough. So, hi, Hiten. Do you have any question? Hi, Senthil. Do you have any questions?
Hi, I have a quick question on the spreads, you mentioned, right? So whenever we go for spreads, as
Mhm.
the buyers have the ability to exercise until like 4:30 p.m., something like that. Some brokers allow until 4:30 p.m., right?
Right.
Say we're gone for, like a sell and buy at the same time. What if that, buyer exercised?
But still, you'll make profits, right? If you are on the right side of the that too, you are not buying somewhere close. Generally, they don't exercise.
Okay.
And also, there will be very minimum 5% chance of buyers exercising on the same day.
Okay.
So, because they also don't know, right? Again, buyer means somebody, right, who might be sitting your next house. You never know, right? Buyer
Correct,
means
correct.
doesn't mean that some big company or someone. He might be bullish, you might be bearish. So, yeah,
So,
again,
in this case, right? For example, like gone with the Tesla, right?
mhm.
Tesla, I gone with the bullish view, but all of a sudden it kind of started dropping to a
Right.
huge drop.
Are you asking about before earnings or so that's
Um,
where, right? For
uh,
example, we took 330 or 340 bull puts.
mhm.
We made 100% profit on that. So why buyer will assign the stocks, or you are
But
going with very minimal risk approach?
right, correct. So in this time, like Tesla, it took a like it kind of behaved as expected.
Right.
Fine. But what on the other side, right? If Tesla dropped like anything, for example,
But
and
still you
then
have you
okay.
have a coverage, right? You have a
Oh,
hedge.
right. Okay, I get the point. Okay, so and like since the Tesla earnings came in the middle of the week, that's fine. But what if that earnings is on Friday? Will it pose any risk?
Oh, again, right? With the spread, you are covering your risk. It is not like you are doing a naked call or naked put. You are not selling a call, or you are not selling a put. If you do that, you have unlimited risk. But if I do 330, 335, that means
Mhm.
my risk is only five points. If it goes even 100 points also, my risk is minimal.
Okay,
90% of the time you will make money, but 10% of the time you have a limited risk.
got it. And understood. But I guess my question is more specific. Say for example, there is a earnings on Friday. Okay,
Mhm.
and then like around 3 p.m. the stock drops or goes against my plan actually.
Mhm.
In that case, if from 3 to 4:30 p.m., if the buyer exercise that specific one, whatever they bought it, and then mine is not exercised, right? I just let it expire kind of stuff. I mean the one which I bought it.
Mhm.
So in that case, will it create a like more risk is what I'm trying to. Understand.
Again, even if one of the legs get exercised, still you have a limited risk. Monday morning you can cover that. That second leg also may get into profit, or you will take a small loss if you have one unassigned leg, or
Because
one leg is open, one leg you got closed.
okay.
But
No.
again, what is the percentage of that probability also happening?
Yeah, true. Yeah. That is there actually. The chances are less. I'm just want to make sure that I'm kind of understood that concept as well, because in this case, right, both my buy and sell are expiring on the same day, right? Say
Right.
assume that it's a Friday expiry,
Mhm.
and the Friday expiry, if the buyer, if they because the stock moved against my plan, if the buyer exercised at between 3 to 4:30 p.m. and the other leg I let it expire without doing it, what is that risk is what I was kind of thinking in, but now I get the point actually. It is only this Friday specific case, and then probably the chances of that happening is less as well. So
Right.
I'm
Very,
good
very
actually.
minimal. And also, you don't have a unlimited risk here. If you're doing a naked call, naked put, you have unlimited risk. But when you're doing a spread, you have a small risk. So, yeah.
Got it. Okay, sounds good. Thank you.
Kishore,
Sure.
can you hear me?
Yeah, now I can hear you. Yeah.
Oh,
Please
thank
go.
you. Okay, I have one example. The Decker, it went against our plan. Okay,
Yeah.
what was the maximum risk if I don't close that one?
Again, we have time until Feb 21st, right? As I said, always if right in earnings in the day, if it goes down again, it is at a huge buy order block. Again, it will keep going up. So your
Okay.
risk is limited because we are also buying call, selling call, or buying put, selling put. Only
Hmm.
that spread is your risk, right? For
Okay.
example, if we took 220, 230, that means only the 10 point is risk. Even if it goes further down, your risk is limited. Or if it goes back up again, you will make profits. That will turn into profits because now you have buyers waiting here. They will take the stock up in the next week.
So
नहीं नहीं
was it not
कोई बात नहीं, तुम
yesterday?
कर लो, चला ले म्यूजिक.
Mhm. Sorry. Sushil, yeah, if you're not talking, be on mute. Yeah. Yeah, please tell me. Yeah.
So if it was the expiration, was it expiration Friday, not
No,
February?
no. This is 221. The deck, I think.
Coin was Friday, you mean? You remember?
Yeah, coin was for Friday, right?
So what about the risk for that? So I will be assigned at $179, something like that.
Even for coin also, we took profits already. But yeah, even if you have also, your risk is limited because always we are doing spreads. With a spread, you have a minimal risk.
Yeah, they assigned me now 179, I think.
179
I
stocks
got
or
exercised. Yeah.
279.
Oh, sorry, 279. I got exercised. So that means I'm looking at a loss of $500 after collection of the
But,
premium.
right. But again, if it moves up again, you'll make profits on that.
I understand. Yeah. Okay.
Yeah.
Yeah.
So
But
just if I hold for 1 or 2 days, again that will move into profits. So
okay.
Tesla, for example, we did 412 or 415, 420. So tomorrow again Tesla moves up, that stocks and will move into profits. We got a bull put. So that is the advantage. If even if it may show as a loss on that day, next day again if we wait, that will move into gains with the spreads.
Okay. And Kishore garu, so I don't know how to sign up for these programs.
Do you mean the prop firms, all those things, or?
Platforms. They're like maybe I'm looking for the options premium.
Yeah, that's what I have shown you. I sent you the link, right? You can always go here, link tree, right choice one.
Okay. So it will be
Mhm.
under options premium link. Okay.
Right, yeah. If you click on subscribe to our US
Okay.
option fee.
Okay. So during the which channel we can talk, like we can question, we can send the questions during the trading time? Which platform?
You can send it on the Ninja bot, or I do live sessions. In the live session, after some time I'll enable the comment. You can ask any questions in the live sessions, because the problem if we enable the chat is everybody will,
Like I
right?
know.
Everybody expects that whenever they buy a call, it should keep going up immediately, right? Whether you take a swing trade, you take a day trade, whatever, they want a candles to be only green. If they see red, they will get panicked. The 100 members will put question, oh, it is dropping. Should I close? Should I take profit? Should I take loss? Like that.
Exactly.
So, for example, Tesla on Thursday, we took 402 call. Right.
Mm-hmm.
On Thursday itself, I got a lot of questions. Oh, it is going down, going down. We know it is very bullish. Right. Next day, it made nearly 500% profit. We
Okay.
took some 50%, 100%, but if we would have waited for 420, 420, it went to 420 plus. That would have made 500% profit on the calls. That will
Okay.
happen, right? Everybody will start putting that pressure, putting that up. So that's where we try to, yeah, so that we can focus on our analysis.
Mm.
Otherwise, all the retail traders mindset, they want immediate, right? Whenever they buy something, they want it to go up. Whenever they buy a put, immediately they want to go down. Right? Price
Okay.
will never go down, never go up. It will always in a wave format. It will go up, some little bit down, go up again a little bit down. So same thing happened with Tesla also. Right? On Thursday it went little bit down, but again Friday morning it went to 420 plus.
Okay. Yeah. Thank you. Thank you, Kishore. Just last information I'm requiring on the Decker. So we have that particular spread, and if I'm holding until the
Yeah,
close, like
that,
until the expiry, so I don't lose big money, right?
that is right. Yeah.
Okay. Thank you.
That is the advantage with spreads. You won't, right? If you do naked call, naked put, if you buy or sell, you have 100% risk. But here you are already having hedge, and the theta decay implied volatility will help you. If it takes, if it
Mm.
starts moving up, if it stays choppy, that will help you to cover some of the premiums. So
Oh,
yeah,
okay. But
yeah, we
because
can.
yesterday was my account was showing, I got five of them, and my account was showing fluctuation of like 800, $900 minus every time. The deck,
Right, right,
yeah.
right. But that
But
that too again, that's why I tell you always
stays
you have, yeah, stay consistent position size. So right,
okay.
if we are making 90% success, if there is one loss, but if you're taking huge position with one, you took
Mhm.
only one contract, you bought 20 contracts with this. If one take
Exactly.
you
Yeah,
take a loss,
I
all the profits you made is gone.
I got it. Yeah, I understand you. So yeah, thank you, Kishore. Thank you very much.
So,
Sure.
Kishore, this is Rajul here.
Yeah,
Quick question. I know you said that you could analyze it before the week for the trades coming in or the earnings coming up. Is that, or do we do it before the, if it's an aftermarket, what do you say, do we do that before the market closes, or do you prefer
right.
that
It
we
is,
do that
no, it
again?
is always better, right? As I said, if Palantir is reporting after 3 p.m.,
Yeah,
if I do around 2 to 3 p.m., I get better, right? We will have better success.
yeah, yeah. Okay. Yeah, because as I was looking through it, and there's a lot of things that I would be interested to, but is it a good time to do it now? Because the orders can always pop in at
True,
any point in time.
true. That's why 1 hour before or 30 minutes before is the best time.
Got
Because you'll have the real time data. You can see if buyers are buying, sellers are selling. Based on that, we can take much better decisions.
Got it. The second question I had, right? I now remember that your this whole historical trend thing that you had shared the other day. It was about a month ago or so, and you shared that you would share that with the existing subscribers for up to March to kind of test that out. Is that still on the table to be shared with us? The historical profit when the stock goes up and down. I just wanted to try that out if that's still available.
Yeah, I want to, right, again, I want to give some tickers which historical is showing that it will go up, and then they can test out whether it went up or not.
Okay, okay. I thought you were going to give us that added to
No,
our.
right, that
No.
is like a $20,000 subscription, because there are 5,000 stocks data. We are pulling 35 years of historical information. So I cannot just give all that information, but I can say that in January all these are looking bullish, or in Feb these stocks are looking bullish. And always
Okay.
you do confidence. Don't depend
Yeah,
on
yeah,
one.
yeah.
Just you can
And do
see
you
like,
share
okay,
that? Yeah,
mm,
sorry. Yeah, no, I totally get it. Do you share that during one of these calls, or is that a separate channel that you share that in for February and things? I just want to just try some of them and see that.
Yeah, I'll share them, right? We have some future stars. So, for example, here there are some stocks which are bullish in first week. There are some stocks which are bullish in second week.
So
So,
are you able to share this with us, or how do you share this? That's all I'm asking for. Even few of this is fine. I just want to test this out so that if you have to subscribe to that, I'm more than happy to do that. But
yeah,
uh,
I'll send this to the futures who subscribe for the future stars. I'll send it. They can all, for example, if American Airlines is looking bullish in first week, right? Week of Feb 1 to Feb 8, American Airlines is looking bullish. Then I can always go to American Airlines. And if my other indicators are also giving me the confluence, or if I have a big buy order block, then we can confidently go and take the calls or buy the stock. But if it is at a huge sell order block, then I can ignore that. So like that, yeah. But basically, yeah, I'll share that Excel sheet for Feb month for the future stars.
yeah, I'm basically I have indicators only, so I'm not subscribed to your other alerts as such. But I was just trying to use this, and if it's something that comes in as an earning stuff and things of that, I can definitely subscribe to this. But is it something that you can share it with beyond futures, or I don't know how that works. I just want to
Yeah,
try this out, right? So I have those three indicator plan that I had from you, right? And I've been trying
right,
to,
right,
yeah.
right.
So I've been right. So I,
So that's what, right? For example, I shared about ASML. You can see like, so there are many examples I shared. You can see ASML, and you saw how it moved for the earnings. Right? Based on the historical reports, from January to 23rd March is generally very bullish period for ASML. So we took earnings for, right? We took bullish bull calls, bull puts for ASML, and you can see like how it moved post earnings. Or yeah, it's it right after earnings it went nearly all the way to 758, 760. Like that, Micron bullish, and then Marvel, MAT 30th January. So yeah, basically I'll share the Feb info for whoever subscribed for that future stars. And again, as I said, NXPI is looking very bullish. Here you can see NXPI generally during Feb, it is very bullish. So I'm very positive about tomorrow's earnings because my price pulse is telling the same thing, T5 telling the same thing, profit zone tool is telling the same thing. Then there is a high possibility for a big move up on the NXPI. Yeah, tomorrow we may see a nice bounce. It is at a discount zone in 1 hour. There are a lot of buy orders. So tomorrow, even before the earnings itself, we can make profits. And before for earnings, we can take one more alert and we can make more profits. Yeah. Let's go to the next one.
thank you.
Yeah. Hey, Kiran, do you have a question?
Yeah, hey, quick question. So does when we get any of the credit, right? Like I mean, credit
Mhm.
spreads when we get the credit. So
Right.
does the exchange hold any money or the buying power? Um, so that if the stock doesn't go, the spread doesn't go in our direction, does it exercise automatically, or if you don't close, or how does it work?
Yeah, they do, but it is only limited, right? If you
Yeah,
do, if, for example, if you are bullish, if you sell a put, they will hold a lot more. But when you are
yeah.
doing a spread, you are also buying, you are also selling. So the hold what they are doing is very very minimal because you also have a hedge.
Okay, okay. Even though we get the credit, they'll still hold it. Okay, got it.
Right.
And the programs, right? So the indicators looks like you are all showing in the trading view. So do you have any in the Thinkorswim platform, or do you prefer or
Yes,
recommend the
we
trading view?
haven't we haven't Thinkorswim, but the success rate with TradingView is 85-90%. So that's why I suggest because you can always watch in trading view, you can take the trades in, right? Because anyway you cannot
Right.
yeah. Trading view is much more powerful. You can have a lot more confidence. We have in-course indicators also, but
Okay.
yeah,
Okay.
my confidence is 70% for think or swim, whereas 85-90% for trading view indicators.
Okay. So in the trading view, so we need to take the premium and also buy the indicators. How does it work?
Yeah, you can go with essential plan of trading view, which is approximately $10 per month.
Okay.
Or if you
Um,
buy during any promo, right? Last week they had 60% off or something, or during Thanksgiving they had 80% off. Then even
okay.
the best plan also you'll get around $10. But yeah,
Okay.
now let us say you buy that for $10 and then you get indicators. Just right. I also do live sessions. I help with SPX, bear calls, bull
Okay.
puts. Then
Yes.
one alert will help you to cover that. So then
Yeah.
all that.
Okay. Oh, so we don't need to buy the indicator separately. That trading view, the plan, we get the indicators with that, right?
No. You buy
Okay.
trading view essential plan
Okay.
and then you buy the indicators. You buy
Okay.
the indicators from us because that is our custom code, custom software.
Oh, okay. Got it. So indicators from you and then, okay. Okay. How much, I mean, can I reach out directly to you? I just want to know, or how much the indicators cost. I mean, if you can share right now, it's okay, or we can chat later. Yeah.
Yeah, basically it is three indicators for 349 per month.
Oh,
We are making
349 per month.
right. We are
Okay.
making because it is not just for indicators. You are also getting trainings. You are getting live sessions. Because if you have
Okay.
to get live sessions anywhere else, you have to pay $7,000-8,000 per month. Here
Yes. Yeah.
you get live
Mhm.
trainings. You get all the offers on prop firms. You get a lot of trainings, a lot of tips which nobody will share. Everything right.
Um,
So just one or two alerts will cover that fee.
Okay. So if we just getting started, like someone for me who has some knowledge, right, in the stock market, but not extensive in the options and like understand spreads. So you just recommend, I just want to try your program, right? Like for a month, you just recommend the options premium channel. Um,
Again,
for yeah.
as I said, if you
Yeah.
want a ready-made food,
Mm.
then any alert channel is good, right? You can go with earnings channel or options channel or stocks channel or
Okay.
futures channel. Or
Okay.
you want to become independent, you want to learn so that you can use the same logic for anything. You can do India stocks, India options, commodities, currencies, futures, cryptos. You
Okay.
can pay 200 for options, 150
Okay.
for stocks, 150 for futures, all those things. Or I'll make a lot more money like that. But
Yeah.
for you to be more successful, if you learn, you will become completely independent. Yeah.
Yes. Yes. No, I
I am
agree.
busy.
Totally agree. Yeah.
Yeah. So
So the live session, if I take the, for example, if I take the stock last question, stock like I mean options premium. So does
mhm,
it also your live daily uh, trading?
right.
Can we also join from that?
Yeah, you can join the live sessions. Only thing is, you won't have indicators on your platform. Only you will receive the alert. Okay, do this
Yeah,
SPX, do this bear call, do this bull put, or do this call like that. You will receive the
got it.
alerts, but you won't have any access to the indicators.
Okay, okay, got it. Will you be sharing the screen in that calls?
Yes, yeah, it
Okay,
will be.
okay,
I'll be sharing and I'll be explaining
okay.
why I'm
That's
buying
good.
something, why I'm selling something. Yeah.
Okay, okay. And one last question, actually. So all this, most of these indicators are your buying calls. Are those completely untechnical? But I think you also account for the global events going on, right? The
Right,
tariffs and all of that.
right.
Um, okay, okay.
Generally, again, right, the events will
Yeah,
not push it. So if you saw on Friday morning, even
yeah,
before the tariff news came, we already
yeah.
saw there are a lot of sell orders. So
Yes. Yeah,
even for earnings also, it
yeah,
doesn't mean that earnings will push the price up.
yeah,
Sometimes based on right, there is a good saying, right? You show me
yeah.
the chart, I can tell the news.
Yeah. Got it.
Name a chart will tell you the news before itself. What can happen? There can be some war news, there can be some COVID news, there can be something, but market will drop whenever you see a huge resistance, huge 1 hour resistance, 12 daily resistance, weekly resistance. There can be some major
There can
bad
be some.
news
Okay,
like
okay.
that.
Got it. Thank you. I think that's all I have. Yeah.
Yeah. Sunil, do you have any questions?
Kishore, actually, yes, Kishore. I want to trade options. Which trading app is good, Kishore?
You can go with either Thinkorswim, which is from Charles Schwab,
Oh,
or Interactive Brokers. Both of them are good.
oh, okay. Currently, I have Robinhood. Is it good or?
I generally don't suggest Robinhood. That
Oh,
is right, especially if you want to do these bull puts, bear calls, where you can make a lot of money. Always right, your fills should be good. Your orders, you should be able to place orders even until 3 o'clock, 3 p.m. Central.
okay.
Robinhood will put a lot of restrictions, and your fills will not be good. So yeah, what I suggest is go with a good brokerage company like Thinkorswim or IBKR or maybe Webull. These are better companies compared to Fidelity or Robinhood.
Oh,
There is
Webull also good. Okay.
yeah, best one is Thinkorswim. Second best is IBKR.
Okay.
Third best is Webull.
Do you have any scripts for integration with Thinkorswim?
Yes, we have, but as I said, right, I am 85 90%. If you use trading view indicators, if you learn, understand, 90% of the time you will make money with the trading views indicators. If you use Thinkorswim, you may make 70% because everything, whatever we can code in Pine script, we cannot code or your order blocks, all these things is not easy on Thinkorswim. So there the indicators may give you 70%, 75%. But here in TradingView, if you follow 85 to 90%, we can make money.
Oh, okay. And one more thing, I'm in Canada.
You have IBKR, I think you can take IBKR.
But I have US license only. Canada, I don't have any DL or something. Is there any IP address they will track
I
from
don't
here?
think they will.
Oh,
If
okay.
you have US license, you can get a Thinkorswim or IBKR without any issues.
Oh,
So on the similar note, can the Kenyan people also trade in the US
Yeah,
stock market?
yes, yeah.
Okay.
It is,
Okay.
especially futures, forex also 100%. They can do prop firm trading also. So
Okay.
in India, UK, everybody can do prop firm trading. They can also trade US stocks, options, futures, everything.
Okay. Got it.
Yeah.
Kishore, one question. How we can identify which stocks are going up and going down? Like you will share in with day before, right? I think.
Yeah, again, as I said, there are certain indicator scanners which you use. They will tell us which have more bullish momentum, more bearish momentum.
Oh,
So yeah, using that we can.
okay.
Hey Ramurthy, do you have any questions?
Yeah, Kirk, I joined very late actually. Where can I get this recorded video?
Yeah, if you go to, you can go to YouTube.
Uh-huh.
And once you go to YouTube, you go to Right Choice Advisors. You will see all the success stories of all the members who are making six-figure income per month. And
Right
also,
side advisor, right?
right, yeah,
Sure. I will look into them. And if I need anything else, I will contact you directly through WhatsApp. Is it okay?
yeah, that's one.
Thank you.
Hi, Kishore.
Yeah.
Hi. So I was going through the plans from the Telegram bot. I see that you have 349 plan and 449 plan.
Right.
The 349 plan it says RC multi MACD.
Right.
So
But
what
yeah,
are the
so basically you get that best three indicators which we are using. Yeah, you don't worry about the names there, but
okay?
when you subscribe and fill a Google form with your trading username,
Okay.
we'll see which is the best one working. We'll give you the best three indicators. If somebody gets a five indicator plan, we'll give them the best five indicators access.
So what is the minimum I should should I go with 349 or 449? All I do is like profit trading, so not into the stocks or options.
Mm, Again, you can start with 349. Once you gain confidence, you can upgrade to 449.
Okay.
Right? Because if you have more confidence, you can go with more confidence, right? If you have five indicators, if all five are telling you that it is going up, then you can go much more confidently, make more money.
Okay. Yeah,
So,
makes sense. Makes sense. So what are the other two indicators I will be missing if I go for 349 plan?
then again, yesterday I explained you, or I explained in a session about different indicators, right? For example, we have something like,
Okay.
uh, right? For example, if you just look at the colors, right? This is like a T6, T66. Your
Okay.
T66 is showing all bulls. Buyers are in control. You can see all green candles. You can see everything green. So if you see all green, you go long. Or you see all three red, you go short. If, for example, sometimes you may have some choppy, right? Yellow. So if you have this yellow thing, then you don't short, you don't, right? That is like a choppy scenario.
Mhm.
So like that, your T6, T66 can help you. Or we have some indicators like this QQQ. It will tell you if you are close to a resistance, right?
Okay.
This went you went all the way to the top. Here also, these are sell order blocks, right? It is telling Nvidia is at a discount zone, Meta is at so you don't need to go through 40 different charts, right? You can put all your symbols whatever you need,
Okay.
but it will tell you that okay, Nvidia is overall a bullish stock, but it is now at a discount zone. Meta is overall a bullish stock. Now it is a discount zone. That means maybe Monday morning after 1 hour, we may see Nvidia Meta going up again. So now you will only focus on these two. There are
Right.
other stocks also in discount zone, but overall the trend is bearish for them. So you can ignore the other ones. But Nvidia Meta are the two best candidates.
Okay. Okay.
Like
So
that or
these are the
spy.
things which I will be missing if I go for 349 plan.
Right. Yeah.
I did not attend this yesterday's session you were talking. Is it shared in the channels or?
Yeah, yeah. If you go here, right? If you get three indicator, you will get this magic pattern
Okay.
indicators. We are making very good success with the T5, T55 plan. But
Okay.
yeah, this is like training on additional. I explained about all the other indicators which we have.
Okay.
You can watch that.
Yeah, I have not seen that video. I will write. I'll check it out and I'll see.
Sure, sure. Yeah,
Okay. Thank you. Thank you, Kishan.
yeah. Uh, yeah. Let's go to Santosh. Do you have any questions?
Yes, hi Kishore, thanks. So I have three questions, all
Yeah,
related to earnings.
yeah.
The first one is when we are doing the earnings alert, and I get the alerts, and I'm part of all your groups. So
Right, right.
some of them I've noticed that the next day you put like the number of contracts you got into, right? So I
Mhm,
know you were pretty much more confident about one or two of them compared to the five alerts we got.
right.
But then sometimes, I so far I do one or two. I don't take all of them, but sometimes the one that I take, like I took the IBM, it didn't work out well. So,
Right.
but then sometimes I take one or two of the smaller ones as well. So it depends. So is there any way, just a more of a feedback or suggestion, so we kind of know the strength of your like like you obviously you have some things like even if you give five alerts, one of them might have a high confidence level, right? And that's why you're also putting your own money or into those ones that are higher confidence. So just as a feedback, is there some way for us to know that hey, this has got a higher confidence factor? Because not everybody might want to put it on all the five alerts, or maybe for diversification it's good to put it on all five, but then also managing it the next day morning, I've noticed sometimes gets tricky because you're trying to close them all quickly, which some of them have already moved a lot in the night, and then they're now like going back to the resistance or the next level before they come back. So sometimes the next day managing closing the correct one at the right time gets a little bit tricky. So I've been trying to do it, picking out of those three or four, which might have a higher confidence level. So that's one thing I just want to discuss with you. It's not really a question, but your thoughts on that. How do we know which one perhaps has a higher confidence level? Or do you suggest taking all of them and then seeing how each one plays? Or what are your thoughts on that? And everybody does it based on their own budget and all that, but just curious, what's some kind of way to better, enter the alerts and also exit them?
Sure, Santosh. A good question. So, for example, right, let us say tomorrow, let us take some example of an XPA itself, right? Tomorrow around 2:30 p.m., let us say I see another 2 million order block, 3 million order block.
Yeah.
So there is 95% it will go up,
Yes,
right? In
yes,
addition
correct.
to 1.6, then that is a right, high confidence setup because you see a lot of buyers, it is already oversold. It came all the way to the bottom. It may do a double bottom and again go up. So, but if price is somewhere here, my confidence is much higher. If price is somewhere in between your buy order, sell order, your confidence, or you can take some small position size, right? For example, if your price is somewhere here, you can confidently go and do the puts. You can confidently do and go with a big position size for bear calls. But if price is in between buy order block and sell order block, it can go up and come down, or it can go down and come up. So again, if you have indicators, you can do that. But if I tell you that, right, because out of 10, 8 or 9 will make money. But that
Yes,
one
yes.
trade, even though I may be very confident, I may put 100 contracts because I know that okay, even if I lose on this, other 8 or 9 I'll win, or
Mm.
I will even if I have a loss next to 2, 3 trades, I can recover it back. But if I tell you that oh, I'm going big with an XPI, and if somebody right, they may take all 100% or 50% on an XPI, leave
Okay,
all,
okay, okay.
all the other positions, right? Because for me, I'm okay to take a risk because if not this one, I can make on others.
Yes,
But
correct.
if you have the indicators, if you are exactly at a buy order or you are exactly at a sell order, that is a very strong uh, candidate. You can go with nice position size, or you can confidently take those ones. If something is in between, you can leave it or you can ignore it. If something is in between, also you can make money. You do a bull put, you go here and buy bull put. You go up and do a bear call here because this will not go above 240. It will also not go below 200. So you can make money this side, you can make money this side. But
But
if you
if you Okay, okay, that makes sense. Okay. Um, as far as like, cause which I do, which you let's say when at around 3:30 when you give the alerts, right? That gives me a little bit time to go in and look at what since I also have the indicators to kind of do a little bit of further analysis, based on the amount of, buy order blocks or sell order blocks, and then choose how, how deep I want to go, maybe buy one or two or three contracts depending on situation. But then sometimes they also come kind of late, right? Because you might be looking at it, but you know not till the last 5 or 10 minutes, right?
right,
So like even sometimes, especially when you send an alert at 3:58, there's hardly any time to even go into think or swim, select all the strikes, and it's done.
right,
So many times
right,
I'll get a 3:58 alert, and by the time I go, I hit send, the bell rings, so it's too late. But I was just
right,
curious, like those can sometimes happen. Sometimes nowadays you give them quite early, so we are able to do the research. So
right.
that's
So
helpful.
again, right, if you wait for more and more, your success will be much more. But I also understand from subscriber point of view, if I wait for more, they may because right sometimes last 5, 10 minutes before there can be a huge buy order block that can give you full 100% confidence to go with a full size. Right in 10
Okay.
minutes before, if they are spending millions of dollars, then that is 99% success. We can go with 100, 200 contracts, make 100% on the next day. But
So the
yeah, I
market
know
knows someone knows about something happening in the
right,
last 10 minutes. That's why that happens. Where these big
exactly.
things come. Oh, okay, okay,
Right.
okay.
There can
That's
be
why it's
some
hard to really guess it much earlier. You have to wait till the last 30 minutes.
right, right. Yeah. So if I wait until last 15 minutes, my accuracy will be 95%. But if I wait until last 15 and send the alerts, members cannot take it. So yeah, that's why I started right looking from 2 p.m. to 2:30. I'm sending all the alerts. So minimum you have 30 minutes to take all the trades.
Got it, got it, got it. Okay. And then on my second question, when it comes to closing the trades, when it like you're pretty much you're often right, like, okay, this is what's going to happen. But the market moves after hours, right? It moves so much up. And then sometimes it comes down and sometimes especially it breaks one of the strikes of the credit spread or something like that. So then how do we know like to keep holding it for more time? Because some of them you just close it right away in the first 20 minutes, but some of them it comes down where if you close it right away, it may be not a profitable or minor loss, should we still wait, or do we have any way to know when is the best time to exit? Because some of them you can close 80%, keep the 20%. Some of them it kind of comes kind of down and goes
Right.
below the, like, close to the credit strikes, and
Right.
then eventually maybe after 2 hours it goes back up. So thoughts on how to better plan the closing, just to get some idea.
So definitely right. Again, if you have indicators, right? For example, if you have IBM,
Yeah.
right? Let us say it went wrong, but if you see that IBM is at the top now, right? It went all the way to the top, started dropping. So where do you think IBM can come till now? Right? In this week, minimum up to what point do you think IBM will drop?
You can go maybe at least to the mid level, right? Close to that 246 at least, where the next buy block is.
That is right, right? So now let us say we got 240, 250 bear call, but it went to 260, but it is dropping to 246. That means our trade will become break even. Now, if I average another two, three contracts for that bear call, if it comes to 246, now your trade will be in profit. So
Got it,
when
got
you,
it.
yeah, when you have this, you know that you are already at a overbought. And when it moves so much, again, there will be retracement. Some 30, 40% it will retrace back. So when you see that buyers are again, they want to buy here, there is a high possibility for price to drop all the way from 260 to 2. So now you do a bear call here, you will make money, right?
Got it. That's how you can sometimes manage a losing trade. Because what I did was in this IBM case, I just rolled it over because you had said, right, in that, hey, it's going to come back down. So instead of
Right,
taking the loss, I just kind of did a rollover
right.
with a
Or
small
you
debit.
can also, you are already at a premium, it is started dropping. You do 260, 265 bear call. Now you all that money is yours, 100%.
Got it. So
If you
you
got
can
one
use that.
contract, now you do two contracts of 260, 265.
Okay, so that way you get that credit, and then even if it doesn't go all the way back to 242, at least you've made it up from the bear call, and you break
Right.
even or make some small profit and exit.
Right. Or you average one more, right? You got 240, 250. You add one more contract. Now it goes to 246. Earlier you got some $2, $3. Now you may get $7, $8. When it goes here, now you are in profits.
Okay,
Right?
okay.
Either you go to the top and do one more bear call, or you just add one more contract to your existing position. You average it out, you will make profits. Because it will not keep going up or it will not keep going down. After earnings 1 or 2 days, again we will see a drop. Or if it
Yeah.
drops so much, it will start going up.
Got it, got
So
it. That's pretty much what when we're doing based on just the chart, right? But then sometimes comes in the earnings play that, or in the earnings call based on their projection that the market gets super excited about, right? Which we cannot predict till the earnings play comes up. But even if that happens, as long as it's kind of reasonable, it'll go to the next buy order block and come back down, or like in the case of IBM,
right,
it'll eventually, even though it's gone up more than the market expected, it'll just kind of, that 30% retracement will eventually happen. Is that kind of the logic?
exactly. Right. Yeah. That's what happens. So that's where our risk is minimal. Your time investment is less, risk is minimal. Especially if you have indicators, you know that okay, until this level, okay, now we are at a premium, we are at a overbought. Now let me you can do a sell order block here, or you add a few more positions to your existing position. So even that one losing trade out of 10 also you can make them as profitable.
Got it, got it, got it. So
Mm,
in some ways, we're almost like doing like two credit spread, even like building it like an iron condor between the two different kind of,
right,
where the blocks are, right? Like one we open the day, and then if it goes in another direction, we open another one, the bear call. So then
right.
eventually either both make us money, but or we'll at least like be able to close both at some sort of a product or profit. Okay.
That is right. Yeah, 80% of the time they go as expected, or 85% or 90%. One or two trades may go other side, but we can manage them by either do one more on the whenever it goes to the top, do one more bear call, or once it starts dropping, add to your existing position, or whenever it comes here, you do a bull put, right? You
Yeah.
sell
Good.
something here, then price will come here and start going up. So all that money is yours. So you are making money on this side, you are making money on this side.
So
So
okay.
that
So
is
in a
the
sense,
best. Yeah,
opening more positions to manage that one lossy position, because now we know where the market is going to go next after the
true.
earnings call. Okay, okay.
Right. Yeah, it will come here, go up. So if you do a bull put, all that premium is yours. If you do a bear call, all that premium is yours.
Okay, okay. Okay. Sounds good, sure. Thanks.
Yeah. Hey Krishna, do you have a question?
Hey, Kishore, thanks for sharing this info. I have one question uh, how do you get that sell order or buy order blocks like the one which you are currently showing? Is it like
Right.
available in Thinkorswim or TradingView somewhere, or is it
Yeah, it is a
something?
custom software we developed, which is pulling all the information from the order books and displaying it. It will
Oh,
see.
okay.
So yeah, once you get access to the indicators, you can see all this information and you can manage your trades by yourself, or you can trade.
Hmm. Is it like so? Does that come with some uh, even this the buy and sell order blocks, whatever you have put in showing? Is it specific to that, or it comes along with some additional indicators,
Yeah, yeah,
or we
you get.
get each one at a separate price? How it is?
We have a 3 indicator plan, and we
Uh-huh.
have 5 indicator plan. For example, here you have another indicator like called T5 indicator, right? That shows when the price is over, right? Whenever you see that it started dropping, that means now real sellers took the control. So until as long as it is at the top, it is in a consolidation or choppy phase. You have to wait until you see a drop, and then you buy the puts, you do bear call, you'll make money. Or it may come all the way close to the bottom, start moving up, you buy calls, you do bull puts, you'll make money. So yeah,
Hmm.
you'll get a combination of indicators. If you
So
use
is
the
this
slide,
part of that three indicators, or is it part of
right?
five
Yeah.
indicators?
Again, you can get with any plan, you can choose whichever indicators you want. So even if you get 3 indicators, you will
Okay.
get access to these ones.
So we choose like, okay, what all indicators we are interested in.
We will
Is
give
that
you the best three. If you go with 3 indicator plan, we'll give you the best three. But you can, right, after a few days, you may say that no, no, right, I do live sessions with all different types of, right. Some day I use price pulse and T5, T55. Some days
uh-huh.
I may use reversal indicator. You may feel like, oh, that reversal indicator is looking good for me, or top trend is
Okay.
looking good for me.
Okay, got
Then
it.
you can change it. You can say that, oh yeah, you can remove this price pulse and give me top trend, or give
Mm-hmm.
me reversal indicator. Like that, you
Okay.
can choose. So for example, I'll show you reversal indicator. So reversal indicator is more like a Bollinger Band indicator, where whenever price goes above the band, it will come down. Whenever it goes below, again it may come up. So for example, let us go to, yes. So yeah, you can, right, whenever it goes below the bottom band, you can do bull puts. Whenever it goes above that and you get a sell, you can do bear calls.
Mm-hmm.
Like that, yeah. There are different indicators. You can, yeah,
Mm-hmm.
once you watch in live sessions, you can always use. We give you the best three or best five based on what indicators you want. But at any point of time, for someone, they may see like, oh, this is looking easy to use, right?
Okay.
For example, this one is more like just based on the colors. You take
Mm-hmm.
the trade. If everything is red, here also everything is red, here red, then you take it. Or here you see it is green, here you see it is green, here you see green candles, you go with a long position. So based
Right.
on
Okay.
whichever you feel easy for you, you can change or decide, and then you can take it.
Okay, got it. But just another one question. Do we have anything to try it out for some time, like a week or something? Is just to see whether we are, because I may
Yeah,
not be
again, right?
expert in
Sometimes,
using.
sometimes you are three
Mm-hmm.
days, 5 days, one for some users within 1 2 weeks, they will be expert, right? There are some users within 1 2 weeks, they are already making 2,000 3,000 per day. Some users may take 2 months, 3 months. It
Yeah.
can be because of emotions, because of. So that is too much,
And then
right?
we need to also get used to these things, right? Like it's like we are not somebody coming may not be expert in using itself, like all these
But
things.
if I give 1 week trial access, you see for 1 week and you decide that oh you are not able to do it.
Oh,
You
okay.
may lose a great opportunity there, right?
Hmm. Hmm.
Because you thought like 1 week is sufficient enough for you to test it out. But you will see again another 100 members making 100K per month. So by giving a trial, one is you are losing a great opportunity just by testing it for a week and deciding oh it is not working.
Hmm.
Second thing is it is too much of administrative work. If somebody cannot see the value where they can make few $1,000s every day and they are
Hmm.
thinking about $300, then that is waste of our right our time giving access, removing access for a week, right? They are attending trainings, bots, and all the administrative expenses, everything.
Hmm.
So yeah, again, right? If we want to grow big, we have to be ready to invest some time or some money. If we can invest and if all others who are in IT jobs, who are in full-time jobs, are minimum 30-40% of them are making huge income, that means it is working. Only thing, if we don't follow the strategy, or if we say that okay, if you see this green, if you see this green, if you see this green, then only go long. But
Yeah.
somebody will just enter, right? Okay, he sees only this green. He still it is red here. He goes and enter with a FOMO, thinking that oh I may miss out, right?
Yeah.
So like that, there will be always that FOMO involved. It may take some time for them to control that FOMO, right? Once they lose few EA accounts or something, then they will think like, oh, I am making a mistake by going with a FOMO. I am not following the rules. I am not waiting for price to drop completely. So, right, as I told you, we are making 90% success with earnings with SPX trades. You saw that it went up, started dropping, we took bear calls. It came
Hmm.
all the way down, started going up. We went ahead and took bull puts at the bottom. So we made money with the bear calls. We made money with the bull puts. So there is thousands of dollars we can make every day, but
Hmm.
it needs some time to practice or to understand to learn. So if you right to invest in a restaurant or a grocery store, a gas station, we are ready to put 300,000, 400,000, $1 million. Right here in trading, you can make huge money sitting at your home. You spend 1 2 hours a day, but we don't want to put that $1,000 investment either for indicators or to then we want to immediately start making money from day one. That is where the problem
Hmm.
will happen. Many will quit after trying for 1 week if we give a trial. So that's where yeah we stop, right? We are doing live sessions. I'm sharing all the live recordings. I'm doing all the success stories of all the members who are making huge. So yeah, if it is only working for me, then you can doubt. But if it is working for other people like you, then yeah, you should give a benefit of doubt. You should take time to invest and learn. And then yeah, there is unlimited income potential because especially with the prop firms, you can copy the same trade, right? Just 1 year's trade came all the way to the bottom. It started moving up. It started moving up. You take a trade, you will make $200-300. Copy that into 10 20 accounts. That is, you're done for the day. You don't need to do any other trades. Next day again, wait for a good setup. Repeat the
Hmm.
same thing.
Okay.
There you go.
Got
So without using our own money, also we can make a lot of money in trading.
it.
Only
Hmm.
thing is, yeah, we need to give some time to understand the logic, to understand how to look for the confluence. Yeah, because
Sure.
trading is new, prop firm trading is new, indicators are new. For some people,
Hmm.
it may take weeks or months also, 2 months, 3 months for them to, right? That
Exactly.
more,
That's
more,
what I
more than
meant
under,
actually.
right,
Like
understanding the
they are not
indicators.
used to, like somebody maybe even I'm not used to those using all those things. Like first you
True,
need to
true,
get used to maybe
true.
yeah. Yeah.
But yeah, understanding is actually easy job, right? It may take 1 or 2 days to understand how to use the indicators. It is more about our emotions, balancing emotions or controlling emotions without going with a FOMO and wait for that, right? When it comes to the bottom, if you take a trade, it went all the way down. But you wait until this there is a nice gap, then you will make profits. If we
Hmm.
assume that oh it came to the bottom, let me take it, we are making a mistake. Right. So that is where if we can control our emotions and wait for a proper confirmation to enter the trade, then we'll be more successful.
Hmm. So in
So
this
yeah,
case, there were three, four dots of green, right? So if I see that right, so and then I need to look above whether it's green or red. Is that what? If I see the green dot, first one.
right.
So so what is the confluence here giving me that to take it or not? Because I see green, right? And
Right.
then
Here you have right here. This one is telling you it is green. This one is telling you it is green. All this time it was red, right? This particular T5 is completely red.
mhm.
But
Okay,
only here it gave you a buy signal. Here you have a nice gap.
okay,
And also if I go and see my price pulse, here I can see that you have huge buy order blocks. Big
the buy
companies are
order.
buying.
Okay.
So now you have a proper confluence. Your price pulse is telling that big companies are buying. Your T5 is telling that oh, big companies are buying. Your yeah, this one is telling big companies are buying or buyers are taking control. So if we just look at one and take a trade, we may have a loss. But when we look at two or three, then
Mhm.
wait for a confluence between all the three, then our success will be much more higher.
Okay, got it.
Yeah, it's all about that confluence. If more confluence, more confidence, more success, more money. If less confluence, we may be taking a wrong side of the trade.
Mhm.
Yeah, we all make mistakes, but our mistakes will get reduced day by day. As you look for more and more confluence, take more trades. Instead of making three mistakes out of 10, you'll make two mistakes after a month. After 3 months, you'll make only one mistake out of 10. Like that, your number of mistake, your success rate will go up, your losing trades will go down. Yeah,
Mhm.
that basically helps you. Yeah. Hey, Jagjit, do you have any questions?
Yes,
Thank you.
Kishore, I have two questions. One is related to assignment. Like, I'm not getting the assignment thing. Like, we have two legs, right? One for
Yeah.
buy and one for sell. So, how assignment works?
No, again, sometimes, right, because when you are doing a buy and sell transaction, then there is on other side you have a buyer and seller. If one of them decides that I want to, right, I want to assign, I want to execute the contract, then you may get those stocks assigned. For example, you bought a call, you also sold a call, right? As a
Oh,
buyer, they have a right. As a seller, you have an obligation.
okay. So, like, if someone don't have that much money to get assigned, like, so in that case, what happened?
Generally, that's why you need a margin account to do the spreads. So if you generally don't have that, then it will not even allow you to take that big quantity.
Okay.
Your brokerage will restrict you to take the trade because you don't have sufficient margin, or
Okay. So we got assigned on the losing leg or on the profitable one?
you never know based on what the buyer right takes the assignment. You can do it, but sometimes if you wait for 2 3 days, your losing leg also will move into profits. For example, let us say Tesla, right? Let us say Tesla, we
Okay.
took a bull put spread on Friday, but suddenly in the last half an hour, without bouncing back, it dropped. So, for example, now let us say I sold a 410 call, or I sold 410 put and I sold 415 put and I bought 410 put. So now I made profits on 410 put, but this 415 put which I sold may get assigned.
Okay.
So that means I collected few dollars, bought this stock for around, I am buying this stock for 415. So on Friday, I may see it like a loss, but tomorrow again, if it goes back to, right, as of now, if you see in daily, Tesla is very bullish. So it may go all the way to, right, your 480, 490 is your strong resistance. That is your premium zone. So today it might be at loss, but it came all the way down, again started going up. Tomorrow it may go to 436 or 430 plus. So there is a high possibility for it to bounce back. So today I may have it, but if stock gets assigned and if I hold it for 1 or 2 days, the stock may go to 420, then I'll make profits.
Okay. Okay. In this case, when you sell a 410 put, so that means you need to buy stocks at 410 strike price.
Yeah, I am buying at
And
420.
okay, and same works in call side. Like if I sell call side, so that means I need to buy at that strike price which I'm selling.
You need to sell at that price. If you are selling a call, that means you are telling them you will sell them at that price. If you are selling a put, you have to buy, right? You are like insurance company.
Okay, okay. It works opposite sides. Like if I'm selling put, then I need to buy stock at that price.
Right.
If I'm selling call, then I need to sell that at
At
that
that
price.
price.
Okay.
That is
And
right.
my
Yeah.
second question is like, uh, one of our like one guy asked you before about the trade management. Like when you share your trades, like out of 20 trades, you took loss on 1 or 2 trades, right?
Right.
So how you decide like this is now management not works and I need to book loss on this trade?
Again, I gave you different examples, right? One is, for example, IBM example, right? Out of nearly 100 trade or 40 trades we took, 2 or 3 trades we had lost. So if you see IBM, it went all the way to the top, right? Your 260, or if you see in 1 hour time frame, you see that you are at a premium zone, right? It went all the way to the top. It went all the way to the top. It started dropping. So if you see, right, on Monday or on Friday, so we did IBM sell 260 call, buy 265 call, and collect 105.
Okay.
So we have, so because you are already at a premium. If you are doing a bear call now, you already started dropping. If you do bear call, that means you already made some profits. You're getting it. Before earnings, we took a 240, 250. That was an
Yeah. So,
unrealized loss.
yeah,
And
this is telling you how to manage a trade, like if it goes against us. But
right,
I'm asking like if when you book a loss on 1 or 2 trades, so how you decide that we can't manage it and we need to book that loss?
right. For example, I don't see premium. I see that it is still going up. I see that
Okay.
still IBM may go up. Then I feel, right, it is better to book a loss. Or you do
Okay.
a bull put on that, right? Instead of bear, now you took a bear call, but I see that it is still bullish. It is still very far from the premium. Then I
Or
will,
order blocks. Okay.
right, yeah, based on the order blocks, based on the
Okay.
chart, I can do.
If IBM goes to 262 and you see the order blocks on 270
Right,
or 280 strike price, and you are seeing that there is a lot of gap, it can move up. So you
right.
will book your loss. Okay.
That is right. Yeah, yeah.
Okay.
Yeah.
Okay.
That
Okay.
is where basically once you learn, you won't panic, or you know, okay, I have one losing trade, but how I can make that profit? I can either do a bear call, or I can add two more positions to my existing 240, 250. So that again, when it comes here, again you do a bull put. Again, it will go up.
Yeah, so just yeah, now I understand how to manage a trade, because like before I'm doing like if it went against me, so I didn't check anything like which area it can go or up to which strike price it can go. I book my loss and go for next trade. So we can decide looking at chart. So if it is like near to any support or resistance, so we can
Right,
wait. So it can come back, right?
right, right,
if
exactly.
if there is gap, so we can book it, so we can't take that much risk, right?
That is right. Yeah.
Okay,
So
thank you.
we
Sure.
can, sure. Vijay, do you have any questions?
Yes. A lot of topics were discussed today. So thanks for conducting this session. But if I wanted to get started, I have a trading account and I do buy stocks, etc. But a lot of things were discussed, like spreads and option. Looks like most of the topics that were discussed today was with regards to options. So what I went to your Right Choice Advisor website, but I wasn't sure what plan or what are the Telegram channels I should subscribe to. I also opened your YouTube. I wasn't sure which one, where should I get started. So if you could give some guidance on that, then I'll be happy to join any
Sure.
one of your groups and get started.
Sure. As I said, there are mainly two ways to do. One is if you want to be completely independent trader, you want to learn and you want to become independent, so you can take trades based on the setup, based on all those things, then this is the best one. You can lease the indicators,
Okay.
right? Then you will get access to the indicators. You will for first few days you will watch the live sessions, understand how to use all those things. Then, or you want ready-made alerts. You don't want any indicators or anything. You want somebody to tell you, okay, buy this, sell this, do this, like that. Then you can go and click on this US options premium channel.
Got it.
So these are the two ways where you can join live sessions and also learn.
So if can you go back to that screen where you have Right Choice Advisor screen? So if I say enroll in one of these like US options premium, that doesn't give me any indicators, right? Separately, I have to take the
Right.
indicator.
Either
Correct?
you can, yeah, that is right. Yeah, either you can get the ready-made thing or you will get it here. I'll give some few alerts in the live sessions so that you understand how to use the indicator and why I am buying or why I am selling, why I am taking those earning trades. You will slowly understand. You will become completely independent. So I'm not giving all 100% of this, right? If I give all 100% of this, then you won't take time to understand.
Correct. Correct. One other question. So you mentioned bull put spreads and things like that. How to actually use the tool to execute those? How do I learn that? Is that specific to each tool? Like in Fidelity, it will be different. In somewhere else, it will be different, and so on.
Yeah, but the process is nearly same, right? For example, if I want to do a bull put for here, I can go here, you do right think or swim. If I want to do sell vertical spread, I'll go sell. So credit spread is nothing but vertical spreads. I'll go and say
Okay.
sell. Then immediately I'm say it is getting that 200 put and 197.5 put. So if I think like it will definitely stay above 200, I can go with 195 or 192.5. I can collect the credit, confirm and send. So I did a 1 hour session last week, 1.5 hour, explaining what are debit spreads, credit spreads, how to take them. So once you join the options channel or this channel, you will have access to all those recordings.
Got it. Okay. So I had two takeaways from this. One is the trading indicator. That is one subscription, and the other one is the options premium channel subscription. Correct?
That is right. Yeah.
Okay. What is the difference between the options premium and the stocks premium channel?
So stocks
Because most of the
premium
discussion
is
today was about options. Correct?
right because that is where you have high return of investment, right? And
Got it.
also, for example, if right, especially with earnings, if something is like this, right? For example, you see an XPI example itself. If I go to daily, so I see that there are a lot of buyers here.
Mm-hmm.
So if I do a bull put spread, I will make profits.
Got
But
it.
if I buy a stock tomorrow, it may even come and sit at 204 after earnings.
Got it.
Right now you are 208. With options, I know that it will stay above 204. I don't know, it may come to 206, it may go to 220, 230, or even if it comes to 200 also, I'll make profit. If I do a 200, 202 bull put, I'll 100% make profit. But if you buy a stock, you may make profit, or even if it stays choppy also, you may lose. All right, you are unnecessarily blocking your money. If it comes a little bit down, you may lose. So with options, one is your investment is low, your return of investment is very high. Second
Got
thing,
it.
you can make huge money. If you want to buy the same stock, you need to put $200. If I want to, I'm collecting the money. I'm not paying money. I'm collecting the money, and I have 95% chance of making money if I do a bull put below this spread, this buy order block. So yeah, that's why. But again, if you want, basically stocks premium, you will get three different types of channels. One is for day trading, one is for swing trading, one is for long term trading. So if you are
And
more
that is
like
that is just by subscribing to
right,
oh,
one, yeah,
stocks premium. Got it. Got it. Okay.
right. If you subscribe to stocks premium, you will get all the taxes. Where our end list will tell you like, okay, you buy snow now, right? This is where you are buying. This is your target one, target two, target three. This is your stop loss, like that. So you'll get all those alerts, right? When to buy a stock, okay, team, okay, buy it to $81. Now first target is done, second target is done.
Got it.
Uh, so yeah, it is purely for stocks.
Got it. I also
And
saw something called training plan. What is that?
so basically, you have all the right on technical analysis. If you want to know all different, right, what are Bollinger Bands or what is Fibonacci, or you want to know RSIs or EMAs, exponential moving average, all those things. Then you once you subscribe, or you want to know what is straddle, what is butterfly, what is debit spread, what is credit spread, what are right out to what is implied volatility, everything about options, everything about technical analysis. Then we basically give you access to. So we did trainings for thousands of people.
Right.
So you get all the videos for options.
Okay.
Yeah, you basically get access to everything, right? Which explains you what are technical analysis, chart pattern drawings, technical studies, advanced screening, option basics, option popular. So nearly this is like a 20-hour videos, and this is 20-hour videos. You get access to all those videos. You can learn everything starting from what are option contracts, what is call agreement, put agreement, implied volatility, what is IV percentile, delta, gamma, theta, vega, in the money, out of the money, or how to do, what are the common mistakes, like that. You have three, four modules. You will receive everything. So because there is millions of dollars you can make, but only thing is you have to put some time and to learn all these things. Then there is a lot of money to be made.
So, if we wanted to get started with your live sessions and guidance, meaning as soon as we can, still options in the options premium channel, you will be mentioning when is your live session, etc. Are there?
Right, right. That is right. Yeah. Every day I post it. Yeah, I post that information in the morning. So
Okay.
whenever I say, yeah, join live session now, around 9 o'clock every day, I do a live session. I'll
And this is
explain
9
what.
o'clock Central Time?
Right. Yeah.
Okay.
9 Central.
And
So
then
yeah,
you have one during opening and one during closing, is it?
uh, basically, yeah, we do one session.
You do one. Okay.
One session, which yeah, sometimes I do until 3 p.m. Sometimes I do until 11:30 a.m. So if market is a little choppy, we stop at around 11:30. If market is looking good, we may continue for the full day.
Got it. Okay.
Yeah, we should.
What is options premium bot here? Other than there is one RC options premium and there is an options premium bot.
The bot is basically where you go and subscribe.
Got it. Okay.
So yeah, you can just go to this Telegram bot and you can select, do you want 1 month plan, 3 months plan, everything you can select it directly. You don't need to, right? So that will show you, okay, for 1 month it is 199. If you go for 3 months, you get $100 discount. If you go for 6 months, you get more discount. If you go for annual, you will get a lot more discount, like that. So
Okay.
once you select one of these, then it will show you these channels to join. Then you click on those join channel buttons, then you will be part of these channels. So this one is purely for earnings play. Only if you want, if you are a busy professional, you want to only spend 30 minutes a day, then you just take earnings. Or you have more time, you can also take SPX, Tesla, Microsoft, all those different trades which we take. And then, yeah, this one you can join live sessions and you can take all the trades.
So I have to go to Stocks Premium bot to subscribe to Stocks Premium. If I have to subscribe to earnings, where do I go and subscribe to that? Or is it
Basically,
part of Stocks
right,
Premium?
yeah, it is part of options channel. Once you go to
Oh,
options,
got it. Sorry, Options Premium. Okay. So if I subscribe to Options Premium,
yeah,
I go to Options bot and subscribe to Options Premium, I'll also get earnings alert.
that is right. Yeah.
Okay, got it.
Mm.
All right.
Sure.
All right, thanks.
Yeah. No problem. Hey, Ankur, do you have any questions?
Yeah, Kishore. So, Kishore, one question I have, like, for the futures, I might have misheard it, but for futures, we can put bull puts and bear calls also.
In futures, you can do it in a personal account. Just like on stocks, you can do options. On the same way, you can do futures on the you can do options on the futures.
But not from the prop account?
Not from the prop account. It is only like you can buy or you can sell, right? Just like stocks, you can buy or sell. Not in the prop accounts, but in your personal accounts, you can do bull puts, bear calls with futures.
Okay.
If you are at a support, right, you can go to ES. For example, now ES is at a proper support. It came all the way down. Right, today I can go and I can do some bull puts. Right now ES is somewhere around 60, 65. So today evening, once market opens, I can go and do 60, 65, 60, 60 bull put. Right, I sell 60, 65 and I buy 60, 60 bull put. Then if it goes up, all that money collected is 100% yours.
Okay.
So yeah, because options, right, on stocks, you can only do between 8:30 to 3 p.m. But with the futures, you can do it from evening 5 p.m. until tomorrow 4 p.m. Even midnight also you can write. Whenever you are at a support, you do bull puts. Whenever you are at a strong resistance, you go and do bear calls. It is like free money. You can keep collecting the money and you can.
Like when I sell a contract, Kishore, now am I obligated, like whoever was the buyer? Now it's an obligation to that individual buyer. If
Right.
he, let's say I did a put. Now the stock was going down, and then this guy bought it from me, and then he plans to sell it out. And now I need to own that stock at that strike price where I sold it,
Mhm.
right? So that means I will not have premium, but I need to own that stock, right? Even the price is low currently, I own it at a higher price, correct?
That is right. Yeah. Basically, yeah, you are right obligated because you collected the premium, telling him that okay, even if it goes down, I'll buy it from you. Right, just like insurance company, right? They are collecting money from you. They are telling if your car goes wrong, they will fix it or they will buy it even if it becomes zero value. They are telling we'll pay you 40, 50,000, whatever is the value of the car. In the same way, when you are selling a put, you are telling them, I give me money, even if it goes down, I will buy it from you at this particular price.
So once I sell it, everything is in the hand of the buyer now. Whatever he does with the stock, right? If it goes up, that's fine. If it goes down, it's totally in the hand of buyer when he wants to sell it.
Right.
Okay, okay.
You can
And
do
for
assignment, but
yeah,
that's why you are not selling a naked put, right? That's why you are doing
yeah.
when you are waiting for a support. At that support, price can go up. You are waiting for a 1 hour support. At 1 hour
Hmm.
support, you are doing a bull put. That means there are a lot of buyers waiting there. Thousands of buyers or 10,000 buy orders, 20,000 buy orders. Now you are doing a bull put. So if it stays there itself, also you will make money. If it goes up, you will make full money. If it goes little bit down, also you will make money. If it
Okay.
goes completely down, you may be at a small loss.
One loss. Okay.
So you
And
have
Kishore,
90% chance to make money if you wait for that 1 hour support or 1 hour. If it is 1 hour resistance, you do bear calls. If it is 1 hour support, you do bull puts.
Bull puts. Okay. And Kishore, for this margin account, how much balance do I need to maintain for the margin account?
And for futures, you don't need much, right? For trading options on the futures, even if you have 5,000, 10,000 also, that is more than enough. If you want to trade options on the stocks, then you need minimum 25K.
Okay.
Yeah.
And like in futures, like normally you say that 7 to 9 p.m. is the time when there's a volatility in the market for futures. Now, what is the time to start looking at the charts? Like 6 p.m. or 6:30 p.m. is the right time to start looking at the charts for
Yeah,
futures?
6 p.m. Central is good time.
Yeah. And I have a last question, Kishore. I wanted to show you a SPY chart. Is it a right call to ask that, or?
No, we'll discuss that later because there are a few more members.
Okay, thank you, Kishore.
Sure. So generally, if it is Monday, Tuesday, you can go for the current week expiry. If it is Thursday, Friday, you can go for next week expiry. Yeah. Hi, Deepak. Do you have any questions?
Hi, Kishore. Yeah, thanks for the session, man. Very helpful. Yeah, some small questions, man. And please pardon my limited knowledge. Firstly, isn't this beer call and bull put same thing? I thought both we are reversing, so it is same. But looks like from what you're explaining, it's different, right?
Yeah, one is you are selling calls and collecting premium. One is you are buying, selling puts and collecting premium. So when you are bullish, you do bull puts. When you are bearish about something, you do bear calls. For
Okay.
example, you
Yeah.
have a lot of buyers here. You do bull put here and you will make money. If you have a lot of sellers here, you do bear call here. You sell 240, you buy 242 call.
Okay.
All that premium is 100% yours.
So when you say beer call there, can we do something to do with the puts also when it is up here, like
If
in the
yeah,
above the selling zone?
if current price is here, if already
Mhm.
price is here, you can buy the puts.
Right. So naked puts we can buy.
Yeah, if current price right now you are exactly at a sell order block and you see lot of sellers are ready to sell it, then you can
Mhm.
buy naked puts. But now you are somewhere here. So
Right.
now if you buy these puts, you have to pay huge premiums.
Correct. Yeah. Because sometimes what happens that beer call we tried. I mean, it's not possible. It gives some issue, and beer call is not possible. So what I'm just trying to see in my mind that if you have asked to buy us a beer call, and if beer call we are not able to do for some reason, I don't know why it sometimes doesn't let me webull I use. Then what is the other thing I can do? Beer call is equal to what? So I was thinking initially because we have reversed both call we have made put and beer we have made bull. So beer call is equal to bull put, but doesn't look like that is true.
Yeah, it's not
So what
exactly.
is beer
Yeah,
call equal to?
bear call is equal to again, right? If you are somewhere here, right?
Hmm.
If the price is somewhere close to the big resistance, then your bear call is equal to your put,
Normal
right?
naked put. Okay.
Yeah, 90% like a naked put.
Okay.
But if you are here, right? Your price is here.
Hmm.
Now I cannot buy a put for this one, right? An XPI.
But in that case, you will not ask us to do a beer call also, right? If the price is down there.
No, if I do a bear call here, 240, 245 bear call, right? I am selling
Hmm.
240 call
Hmm.
because I am expecting price will not break this level.
Okay, got it. Okay,
So if I sell 240 and buy 245 call, I am collecting $100, $200 for every contract.
correct. Okay,
So now if price is going touching this and dropping, and by this Friday, if it is just staying in between, then all that money is 100% yours, right?
okay, got it.
You
Yeah,
cannot buy
so
a put, right? You cannot buy a put now. If I buy a put, I have to pay $20, $30 for each contract. And if it goes all the way up, all the money is lost.
okay, got it. That is our vertical
So,
spread are helpful. Got it.
right.
That is
So, yeah, with a
interesting.
vertical spread, now I can take a bull put here, I can make money. I can take a bear call, I can make money.
Hmm.
Or Again, I told you that SPX example.
Hmm.
You see there is a huge sell order block at the top. You do
Ha.
a bear call, you make money. You see a big buy order block. I take a bull put, I make money here. I do
Got
a
it.
bear call here, I make money. So even though it may be $50,
Hmm.
but if I know that there is a huge sell order here, there are a lot of sellers here.
Hmm.
If I go and do a bear call, right? Let us go to 1 hour or 30 minutes. So if I see that there is 501.14 million sellers here, that many orders
Right.
are sitting here. So
Right.
when market started dropping,
Uh-huh.
we can do 61.40, 61.50, 61.20, 61.30, and
Hmm.
you are collecting money. So because you are expecting that price will not go above this.
Correct. Because sellers
Yeah.
will sell it at that point.
In the same way, I see 245 million. When it is dropping, I
Hmm.
know these buyers will try to push the price to the top. So I am
Huh.
buying the bull puts here. I am collecting money.
Got it. Got it.
So at the same time, you are making money on the upper side. You are taking money. Now you cannot, right, buy a call. It may stay choppy because overall trend was bearish on the day. You never
Hmm.
know whether it will suddenly go up or not. But
Hmm.
if you are doing a bull put, your risk is very, very minimal. If you are doing a
Got it.
bear call, your risk is minimal. So
Got it.
whenever, right, tomorrow morning when market opens, let us say price is somewhere here. You do bull puts, you make $500,000 by end of the day because there is a huge buy order block.
Got it. And this strategy can only work for the same day expiry, right? Because these
Yeah,
orders may.
right. There might be new buyers, new sellers. So it's zero
Right.
DTA, you have high implied high theta decay, right? For the same day
Right.
expiry, even if it stays choppy, also you'll make money,
Got it.
right?
Got it.
Because
Got
of the theta decay. So and suddenly there might be a good news or bad news, and it can go further down. So for zero DTA, it is best strategy.
it. Got it. Got it. Got it. Fine. Bhai, one more question. So these blocks, like we see, right? These blocks I understand are from the order book, and the order book is like continuously changing, right? Continuously like up, down happening. So these blocks are for the current time, or they were like because I don't see them changing as often as they should.
Right.
So
If you
so
go to
or is it
one
a
minute,
snapshot? Mhm.
if you go to 1 minute or 2 minutes, they will change much more frequently. If you go to 1 hour, they change only at the end of hour.
Oh,
So
okay, okay, okay. It
yeah,
depends on what type of chart you are
right.
seeing.
What you are looking. So here in 1 hour, you may see 245, 500 million. Same thing if I go
Uh-huh.
to 5 minute, I may only see, right, I may see only 26 million
Right, right,
because
right.
it is just looking at in last 5 minutes how many orders got added, what is the net value. Whereas there it is looking at in last 1, 2 hours, what is the net value, what is the delta like that.
Right. And normally when you are looking, so that we are also looking at the same chart, do you look at like 1 minute or a 5 minute chart?
I generally look at 5 minutes in the market hours. I look at 5 minutes.
Oh, 5 minutes. Huh? Okay, okay. I am mostly on 1 minute, so maybe I should change that. Okay,
Yeah, 1 minute
good.
is sometimes too much of noise. So it will be too many buy and sell. So you may lose bigger opportunities, right? For example, if you are in 5 minutes,
Mm-hmm.
you can see that right here you got a sell order. From there it was this was red, this was red. It kept on going down and down
Mm-hmm.
all the way until here. But if, for example, if you are in 1 minute,
Mm. Yeah, very
there
choppy. Yeah,
there may
up
be,
down,
yeah,
up
it
down,
might
up
be
down.
up down up down. You will be confused and you may
We can't understand the trend better. Okay,
right,
got it,
right, yeah.
got it,
So
got it.
that's why
Mhm.
always your higher trend, right? If you go
Right,
to 1 hour, you are at a resistance. Use that to trade in 5 minutes.
right, right, right. And right above these bar, this above chart, is it a that seems like a MACD chart? Is it a MACD crossover or some custom
No, it
indicator?
is custom one. It is not a MACD.
Okay, okay. And one of yours RC1 and all that reverse? No, something else.
Yeah, this is T5.
T5.
Yeah,
What is T5?
T- T5 indicator. Yeah, basically that tells you where you are overbought, oversold, when the trend is
Okay,
changing. If there is a lot of gap, that means there is a nice bullish trend.
okay. T5 is seems like your indicator, right? You custom made it.
Yeah, all these what we are using are our custom
Are
indicators.
all
Yeah.
custom made? Fine, fine, fine. ठीक है. One mistake I did on IBM and I lost some money. There was I didn't see that date thing that it was February something and I took the same week expiry. So is there some kind of a rule we you use or for example while looking at this chart, how do you decide which expiry to take? Like
That's what
FPX, I understand it is daily mostly, but for other or any other thing, how do you decide which expiry to take? Because I
so
don't
the,
think you look at all the different expiries. You probably
yeah, if the setup is very strong, you can take the same week expiry.
okay,
So if the setup is little weak, then you go to the next week. So even though it goes up, it will come down again.
okay, okay. So
If the
you
setup is
base
Yeah, because if the setup is very good, then immediately you'll make money on the next day itself, right?
got it,
If
got it, got
we got Microsoft, Tesla, Meta, Apple, everything we got for 131.
correct, correct, correct.
Wherever setups are little weak, we went ahead and took the next week expiry. So you have one more week that theta decay IV, or if it goes up also, it can come down. So we took the next week expiries.
Okay, okay, perfect, perfect. Bhai, one more question. You had that you talked about a prop account. What is a prop account you mean by? Is it different than like any normal account? Prop account?
Prop account means where you don't need to put your own money. You are basically using some other's money, or those
Oh,
companies will give you the money to trade. Before that,
really?
they will put an evaluation. So you can go to the channel. You can watch the video. Last week I did some all the from basics. I did a session. So
Okay.
there are prop firms where you can trade on stocks. Yeah, there are prop firms where you can do for futures. But yeah, there are many prop firms for futures. So I suggest futures is the best one.
Acha. So they look at our like trading. I don't
Right.
understand. So why will they like they, is it just to have a resource? They want someone to make
Right.
is there
Why
some
why do IT consulting companies hire people?
acha. Oh, interesting. I didn't know
Right.
that is also a kind of work we can do.
Yeah,
Acha.
yeah. That is a huge
And,
opportunity. So you can go and see these two scalable opportunities to make 2025 best year in your life.
oh,
So
do you have a YouTube for this? We can see?
yeah, you can
Acha.
go to the
How do I
you can,
on your channel?
yes, you
Two
go to right
scalable
choices.
opportunities.
Right.
Acha. So they will look at what? They will look at they'll
So
give
first they will
us
give you a dummy account, a paper account,
got it.
and ask you to trade and make money. To get the
Okay.
dummy account, you have to pay some $25.
Okay.
So if you lose, they are making money, right, on your dummy account, because most traders trade with FOMO, emotions, without following a system. They make money
Uh,
like that. Let us say
okay.
you are doing good, right? You are
Uh,
one of those 5%, 10% who are disciplined, who follow rules, take
uh,
the trades. Then
uh,
if you do good, then after some time they will give you a real account.
okay.
And whatever trades you are taking, they will copy it on a bigger account, right? They may have
Okay.
a 5 million account, 10 million account. They will take trades on that.
Okay.
And
Interesting.
and then they will make money, right? If you are a disciplined trader, they will make
Mm,
money. If you are an undisciplined trader, you are a trader just blowing the accounts, they will make money,
okay.
right? Whether you are good, they will make money. Whether you are bad, also they will make money.
Interesting. Okay. And for that they pay us something, is it?
Yeah, they give you that 90% of the profits, they will give it to you. 10% they will keep.
Really?
Yeah,
Wow.
that's a huge opportunity. So
Mm,
because you can scale up as much as you want. You can take 20 accounts, and there are 20, 30 companies like that. You can take multiple accounts from each company. You are trading the
okay.
same, you are watching the same ES or NQ or GC, and you are taking the trades, and you can make huge money every day.
Okay. Got it. Got it. Got it. Got it. And but you don't do futures, right? You don't do futures, or you have a separate channel for futures.
You have a separate channel for futures. All these things are connected. If SPX is dropping, you can take ES and take shorts. You can take SPY and you can do options, right? It is like all these things are connected to each other. If you are watching SPX chart, you can at the same time you make money with your bear calls or puts. You take ES and make money with your ES short. You can take ES futures. You can do ES bear call spreads, make money with options. You can do SQQ, you can buy the stock, you can make money. You do TQQ puts, you can make money. You can do QQQ bear call spreads, you can make money. All you are doing is just watching one chart. You can make money with forex, you can make money with stocks, you can make money with options, you can make money with in 10 different ways. All you are doing is watching one chart.
Okay. अच्छा थोड़ा सा सीखना पड़ेगा भाई.
Yeah, yeah.
No issues. Okay. Okay, bhai. I think yeah, I'm good. Thank you. Appreciate it.
Kishore Kara, Sunil here.
Yes.
I purchased options now, and the TradingView subscription I taken. To see the real-time data, do I need to enroll any futures also, like?
No, one is you can connect to get to any one prop account, then that will give you the real-time data for futures.
Which one
Or if you have, for example, if you have interactive brokers or Webull or some account, then you can connect to them. Then you will get the data for stocks. Or you take Apex Trader Weight account, or you take some take profit trader weight, or you take Allied Trader Fund trader weight. Then those platforms will give you the real-time data for futures.
Oh, okay, okay. Yeah, I have Webull account is there. Okay, yeah. Just
Yeah, you can just click on that and connect, give your credentials. Then once market opens, you will see the real-time data for all the stocks. Yeah. Hey, Messi, do you have any questions?
Oh, okay.
Hey Kishore, quick question on the IBM. Can you go back to the IBM chart?
Yeah.
So you said to cover the trade, bull put trade, what we had,
No,
right?
11 o'clock I had to see. The last
Right.
time I came, it was 10:30.
Right.
So 260, you said 260 is a bear call you want to take, right? There's 260 and 265. Why did you
Right.
decide 260? Because it's better to go with 262 or 265 to 270, right?
You won't get much commission, right? If you are go above and above, you don't get much commission.
No, because we premium zone ending at 262, right? We can keep anything above that. The call.
But if you are close to the price or you are little bit below, your premiums will you can collect more money. Right? For example, if you do 265, 267, or you do 260, then you may make only $50 for each contract. Here, if you do 260 and 265 or 262.5, you may make $70, $80, $90 because you are already at a premium. That means there are a lot of sellers. You already sellers took the control, right? It started dropping. So it may come more until 246. So now your risk is very less, right? Your price pulse became red. Your T5 became red. It started dropping. So IBM can come all the way till this minimum 247 or 246 by tomorrow. So again, tomorrow we can go and do a 250, 255 bear call.
Okay. So on the earning alert, right? You send us the alert. Okay, the spread premium is, let's say, 120. By the time we place the order, it becomes like $100, the premium collection. So by Monday, if we try to close it, the difference of, let's say, if you take it at 120, but I take it at 100, so difference of $20 per contract, right? So that would be the profit on Monday. So do you think
No,
like we should?
when earnings generally you will make 80 to 90% profit. Right? For example, we for Tesla we took 340, 330. We made nearly 100% profit. For Microsoft, Meta, we got somewhere at the top. We made 100% profit. So for earnings, because the move is big, right? There will be a big up move or down move most of the time. So you make 80, 90% profit most of the time.
What is that delta we should, let's say you, when you send the alert, it's 120 premium collection, but
5 to
by the time we
10%.
put it,
Yeah.
okay.
If it is above 5 to 10%, then you ignore the ticker and go for the next one. because every day you have 10-15 opportunities.
Okay, thanks.
Yeah, or sometimes, right, you just put a limit order and wait. Because
Yeah,
there might be a big difference between bid and ask. So
yeah,
don't try to do a market order.
yeah. Limit order did not get executed most of the time, so that's reason to match your price, right? Let's say you have 120 premium collection, we kept the limit order for 120.
Yeah,
They
but
never got executed. Yeah.
there will be so many opportunities every day. So if something did not get filled, that's okay. You have lot of other opportunities.
Okay, thanks.
Yeah. Yeah, Arjun, do you have any other questions?
Sir, usually I work like 10 to 6. So I want to focus on the futures. So which option is better for me to get guidance, information, alerts from you?
You can go to this one where we have the futures. That we have futures channel. You go and select this futures and crypto channel where we mainly, right, again, you will be invited to the live sessions where we take the future trades. So you can subscribe. So in the evening time also, you can take the trades.
Sir, one question. Do you provide the training on futures? I've never done futures, so not sure.
Yeah, I do. Last week also I did a training and I shared the training for all the options premium members.
So you said RC futures and crypto premium channel?
Right. Yeah.
Kishore?
That is right, yeah.
And that includes the earnings alerts also?
No, that is only for futures.
Oh, okay. So you have anything common, futures and earnings alerts together?
No, we don't. Basically, that is for options, this is for futures. Yeah. Because for futures, there is no earnings or anything. Only for stocks, we will have earnings.
Oh, okay.
So, top
Kishore, on
fund.
a side, sorry.
Yeah.
On a different note, right? Earnings fund, right? That is only active for every quarter, right?
Yeah, we started 2 weeks before, and then we are starting one more because there is a lot of requests from other members. So from tomorrow, we are starting the second earnings fund, earnings
No,
and
but it's
SPX.
that fund will be active only for four times in a year, right? Or is it like
Yeah,
throughout the year?
no, generally, 4 times every quarter. Whenever the new earning season begins, we again a new fund will start. So we'll close this existing fund. If anybody want to continue for the next fund, they can keep their share, take the profit out.
Okay. So
But
Jan, you'll close the current, like Jan end, Feb end, you'll close this current fund, you're telling.
no, so for example, now we started, right? Then
Okay.
at the now Jan, Feb, March, until April 15th, this current earning season will go on, right? Whatever is
Okay.
for the quarter 4, all the
Okay.
companies are reporting what they did in the October, November, December.
Okay.
So at the end of April, that will complete. Then again from May 1st, again a new earning season for the Q1. For 2025 Q1, all these companies will report how they did it in Jan, Feb, March.
So you'll open a new fund that time.
Right, new fund, or maybe if all the members are happy, they may continue that. Okay, we'll just keep our share, take the profit out.
Okay.
Then the same members will continue. And because every 3 months you have a new earning season. Right?
Thanks.
These companies will keep reporting for every quarter again and again. So you have every day you have 5-10 opportunities, 15-20 opportunities every day. Especially if you use the strategy which I shared, 90% of the time we'll make money. Yeah. So yeah, that's it, everyone. I know I took more time. You wanted to answer all the questions because many of you are waiting. But yeah, as I said, if you take time, there is a lot of money to be made, and there are strategies where you can win 90% of the time. So if you use the proper strategies and understand where you are buying, selling, then yeah, there is a lot of money. If we take trades without understanding, yeah, there is also a big risk. That's why it is important to learn, practice, and then there is a lot of money to be made, and there is no competition in trading, right? If I make money, you all also can make money. It is not that if I make money, you have to lose, or we all there is no competition. So that's where we have to take time and have a backup plan, because job market is getting bad more day by day. So better, because once you learn, then because you can do futures anywhere across the globe. You can do currencies, you can do stocks, options across the globe, sitting at home. So yeah, regarding the fund, we already started, and yeah, first fund started. Second fund, yeah, anybody is interested about that, you can send me an email on kishore.ramaraj@gmail.com. I'll share more details on that, because this meeting is not for that purpose, so we don't want to take more time on that. But I hope everyone understood how we are making 85-90% success with earnings, and how you also can make. All we need to do is see where big buyers, where is big sellers, go bottom of the buyers, do a bull put, go above the seller, do a bear call. 90% of the time, with a low risk, you will make money. If you buy calls or puts, you are taking a high risk, huge risk. Yeah. Okay, everyone. Have a nice rest of the weekend, and talk to you tomorrow. Yeah, take profit trader is the best one. Once you complete evaluation, every day you can take profits from them. Take profit trader is one of the best prop firms.